Technology has come a long way from then. Professor William Derringer of MIT has studied what effects this increasing computing power is having on which deals get done and how. We asked him what led to his research.
So this it's sort of an interesting story. I was actually at an event at MIT, and I was speaking with someone who was one of the board members at MIT, and he mentioned, I used to know some of the people who were involved with VisiCalc early on, and a series of conversations led me to this kind of interesting anecdote that apparently Michael Milken at one point had said that if you really want to understand what happened in the 80s and the kind of the rise of buyouts and the sort of mega deals of that period, the real key is VisiCalc. So it was spreadsheet software. And so I spent some time trying to kind of track down this anecdote. And I found it mentioned a couple of other places, and it took me on this sort of interesting journey of trying to figure out, well, what would that have actually looked like? So how would spreadsheet software actually have changed things? And what I found was that it's sort of more than just a matter of kind of making calculations easier, but that it really seemed to change the kind of limits of financial thinking and imagination. So things that were pretty hard to do. So modeling an LBO by hand, kind of on paper, was very arduous, very time consuming. And importantly, it was not sort of dynamic. You couldn't kind of tweak one parameter, tweak an interest rate, tweak a projection for revenue growth or something, and then kind of get a new answer. And so what seems to have happened quite quickly, and there are interesting quotations about this from people at the time, was dealmakers realized that you could use spreadsheet software to not only kind of model potential deals, but also to sort of scan the realm of possible deals. So instead of having to just look at one possible deal, you could run similar sorts of scenarios across a kind of wide range of different potential target companies. And I think that in some ways really, you could even say it sort of changed the way in which business was understood from the sort of perspective of Wall Street.
From your work, could Mike Milken have done what he did without spreadsheets?
I don't think so. I mean, I think there would have been significant limitations. I mean, among the things that's interesting about the Milken story, and this was actually a lot of what my research was interested in, was he was sort of simultaneously, his work was simultaneously very technologically innovative, and at the same time sort of very personality driven. But there were certain aspects of the kind of Milken machine that was built that was highly technical. I mean, much of it was even down to things like being able to track and sort of catalog the existence, sort of where the market was in high yield bonds, who owned things, who were potential buyers, but then also kind of valuation techniques. There were sort of long-standing methods, of course, for valuing bonds, but with new sort of handheld calculators and spreadsheets, the ability to kind of analyze and value fixed income instruments became kind of radically easier.
Where are we now? How is the current technology changing the nature of deal making and private equity? And let me ask you a very specific question. Do we just not need as many private equity bankers anymore?
Yeah, so I mean, as someone who spent most of my time in the past, I know sort of about as much about the kind of really cutting edge stuff as certainly many of your viewers. But from what I understand, one of the areas of development is, for example, trying to sort of use the capacity of AI to sort of simplify and automate things like modeling LBOs, right? So when I was did training, my first day as a investment banker, not the first day, but maybe week 2 or something, you learn how to kind of build LBO models on spreadsheets, and that's the sort of thing that required quite a lot of training, required a certain kind of technical artifice and expertise, and that's the sort of thing that may go towards that may require less sort of direct kind of time and training. But one thing I think, we know from the history of technology, and certainly the history of the kind of calculation tools that I like to study, is that the kind of automation of some of those calculations and the automation of kind of lots of different things in the world don't necessarily lead to less work. So if I had to guess, and I mean, as a historian, we're always sort of cautious about making prognostications. I would not think that new tools would sort of lead to the need for fewer people, but rather what I would expect to happen was that they would kind of change the nature of the work.
That was Professor William Derringer of MIT. Coming up, a precarious equilibrium. That's how Scott Bessent of Key Square Capital describes the U.S. economy. He joins us to say why and what and investors to do about it.
Investors should be ready for more volatility.
That's next on Wall Street Week on Bloomberg.
Why does this business model work? Because it's virgin space. It's never been done before, and it'll never be done again. When you step back and you look at something that's been golf through institutions has been the way it has been for 53 years without change. In 1993, I stepped back and said, okay, this is not right. It's doing the same old Groundhog Day. Everything's the same. Players are a pass-through entity. They're not getting any equity built in their day. Once they're done playing, they're out. I thought, that's just not right. When you have to build a sustainable model, you need to have these players, these famous, the world best, the best of the best. You need to give them equity into the future. You need to give them a vision of where they need to go and how they're going to get there.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
This is Wall Street Week. I'm David Weston. At the end of a week focused on Kamala Harris's plans for the economy and how they differ from Donald Trump's, welcome back now macro investor Scott Bessent, founder and CEO of Key Square Capital. So, Scott, welcome back. Good to have you here.
David, always nice to be with you.
Before we get to the rival economic theories here, let's talk about where we are in the economy generally. You have a note out right now talking about a precarious equilibrium in the economy. Mm-hmm. What makes that precarious?
Well, now I've been doing this 35 years now. And the U.S. economy, in my mind, is starting to look like an emerging market economy that, or every kind of emerging market blow up that I've seen in my career. And that is you have rise in asset prices. So in the U.S., stocks and housing, that is fueling consumption by the top 10 or 20% of households. Top 10 or 20% of households or count for more than 50% of U.S. consumption. Then below that, the rise in asset prices being fueled by a 7% to GDP budget deficit, biggest we've ever had when it's not a war, not a recession. And then the third leg of that is Janet Yellen has moved the quarterly refunding to much shorter term debt, which has had the effect of suppressing interest rates. So you've got, I call it the three body problem after the Chinese science fiction book and the famous math problem. So we don't know which one of those could go first, but it's one of these that if the stock market were to go down, then it could create a gap in consumer spending.
So that does sound pretty perilous for investors. And given the fact we don't know which one will break, although you think one of them is likely to break at some point, what does an investor do? How do they position themselves for something breaking?
Well, I think investors should be ready for more volatility, which I also talked about in the note. I think gold's very interesting here. It's at an all-time high, I think, as we're speaking today. And I think just in general, everyone should do a gut check, make sure they're not too far out on the risk curve, because it's been a pretty good run.
So let's turn to the question of rival economic plans from Donald Trump, somebody whom you have known for a lot of years and talked to from time to time, and then Kamala Harris, somewhat new onto the scene, at least with respect to her economic plans. How does an investor really address those two alternatives? How do you macro invest around those two alternatives? Start with Kamala Harris.
Well, look, I think it's two competing visions. Michael Boskin had a very good editorial in the Wall Street Journal yesterday, and he said, we're not getting a lot of meat out of Kamala Harris's programs yet, but we can go back and look, and there are three different sources. What does she say in the 2020 campaign? What did Harris Biden do? And then what has she said so far? So in the 2020 campaign, which she's running from, single payer health care, lots of restrictions, big spending, stopping fracking,
which she has backed off of. She said she's thinking better now.
Well, I always think with a politician, it's where's your heart and where's your head? And I think in her heart, she still believes that. With Joe Biden, he campaigned as Scranton Joe and then broke hard left. And, we ended up with a great inflation. I think she is hard left. She's trying to maybe constructive ambiguity. And, I think maybe that's why CNN and the Washington Post came out and chastised her over the policies she talked about in Raleigh on Friday, because she's supposed to keep the mask on past November 5th.
However we read it. What about things like housing? She's trying to address that. We do have a housing problem in this country. I think you'd agree.
Yep.
We do not have enough housing. We're not building enough housing. She has a plan, at least, to try to stimulate that.
Well, there was no plan to say how she's going to stimulate it. What she's going to stimulate is buying. We don't need more house buyers. We need more houses. And there was nothing for how that's going to happen.
But don't the markets react to that and say, if there are going to be more house buyers, we better start building some houses?
No, it just means prices are going to go up. Costs are going to go up. Why don't, there's no solution to the root cause. Why don't we have more housing now? Is it, blue city, the zoning problems? Is it that we need some kind of nationalized regulatory, in terms of building codes? Is there an affordability problem? Because, I will tell you that a lot of the policies from Harris Biden over the past 3.5 years have added to the cost of housing.
So let's turn to the other side of the aisle, if we could, to Donald Trump, something you know a fair amount about. A lot of criticism that his economic plans would actually be inflationary, particularly on the tariffs and curtailing employment from immigrants, curtailing immigration. Right. What do you respond?
Well, first, let's talk about curtailing immigration. So for the first time in my career, the left is actually admitting that immigration suppresses wages. For 35 years, we heard immigration does not suppress wages. Now, it seems like the only supply-side solution that Harris Biden had in the past 3.5 years is more low-end workers.
But it did keep inflation down below where it otherwise would have been. Do you agree?
Well, in the Harris Biden world, sure. Because they also constricted the heavy regulation, and they kept people out of the workplace. So, and then I actually don't think that they have a problem with low-end workers doing better. So, if low-end wages go up, and as you said, tariffs. Tariffs are a one-time price adjustment. It's not inflationary. You don't set off an inflationary spiral. It's what, like in the UK, they call it an administrative adjustment.
Provided you don't keep escalating them.
Providing you don't keep escalating them. Most of this would be aimed at China, and China seems to be, it's a subsidy model. So they're just pushing out the, all these products as an employment scheme. These companies aren't making much money. So if you just want to keep the employment going, and I also think, I've been thinking about this a lot. I think that tariffs can, in a way, be regarded as a kind of economic sanction without a sanction. So if you do not like Chinese economic policy, and they are forced labor, cheap financing, flooding the market with overproduction, you could do two things. You could put a sanction on them, or you could put a tariff. You could also do it. The Chinese have been suppressing their currency, so it's also an answer to currency manipulation. So, but at the end of the day, I do believe that Donald Trump has changed the conversation on tariffs because he's turned them into a negotiating tool. He says, we will drop ours if they drop yours. It's kind of free trade versus fair trade.
Let's talk about the Secretary of Treasury, because you've been critical of Janet Yellen in the past for being too political. One thing I think we're reasonably confident of, she will not be the Treasury Secretary a year from now. Are you confident that Donald Trump will not appoint someone as Treasury Secretary who, in fact, will be political?
Look, there's political and there's political. All cabinet positions are political appointees. Then there is what is appropriate, what is normal. For a cabinet official to step out and start talking about threats to democracy, for the Treasury Secretary to show up at a rally for a candidate who is not the president, highly inappropriate.
Finally, debt and deficit. You've said in the past you believe former President Trump is very concerned about that. How do we reconcile that with extension of the Tax Cuts and Jobs Act?
Well, I think that there's a lot of demand, especially in the Republican House, for pay-fors. So as it stands, the Tax Cut and Job Act CBO scoring, which is never right, is saying that at a full extension, ceteris paribus would be $4.5 trillion over 10 years. Doesn't take into account any more growth. That the Republican House, has already identified at least half of that in pay-fors. A lot of it would be turning off this IRA, which is a doomsday machine on the deficit. It was originally scored at a plus 50 billion, and it's if it's allowed to continue to its final denouement would probably be over $4.5 trillion. The empowering states on the health care. Maybe some tariff income.
So why don't we hear from former President Trump what you just said, which is, I will not have an extension of the TCJA unless we have pay-fors? That might reassure the markets to some extent if we were confident of that.
Well, there might be some of his advisors who are advising him to say that. Because, I do think this debt and deficit is going to be one of the big issues of the day. I think Americans are worried about it. And, when we go back and look, prices have jumped to a high level. Very good chance, no matter what Vice President Harris wants to do, very hard to get grocery prices down from that level. But things you can get down are house payments, auto payments, credit card payments, and you could do that by getting interest rates down. And I think the way to do that is to start with a good deficit reduction program. We've been pedal to the metal fiscal. The Fed has been pedal to the metal rates. So if you were to stop the big fiscal deficits, then the Fed could actually go into a proper easing cycle.
Scott, it's always a treat to have you with us. Thank you so much. This is Scott Bessent of Key Square Capital. Coming up, Google has been judged a monopolist. What comes next for a leading hyperscaler? We ask Jennifer Huddleston of the Cato Institute.
I think there's always a question when it comes to tech companies of what would a breakup actually mean and what would that look like?
That's next on Wall Street Week on Bloomberg.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in?
I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Morning from our world headquarters in New York. I'm Manus Krennic.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
This is Wall Street Week. I'm David Weston. A federal district court has ruled that Google is a monopolist when it comes to search, and this fall will decide what to do about it. To explain what's at stake and what to look for next, welcome back now Jennifer Huddleston, Cato Institute Senior Fellow in Technology Policy. Great to have you back, Jennifer. So first of all, let's start with what the court decided. It's a very long decision, but having looked through it, there's a lot of talk about the Biden administration really trying to create new antitrust law. Is this new law or established law being applied to Google?
It's a bit complicated. So what we saw in this particular case was that the court ruled that Google had violated parts of the Sherman Act in two key regards when it comes to the exclusive distribution agreements that it had, as well as to a very specific type of search advertising. We saw Judge Mehta in this case apply the Microsoft case to this, although there's a lot of questions around some of the decisions that were made, some of what the court decided to reject in terms of potential competitors, whether or not that's the market that consumers actually experience, some of the conversation around what some of these alternative products look like, whether or not they're actually equal products or inferior products. So while we didn't necessarily see new law or a change from the consumer welfare standard, we did see some questions about perhaps how some of those standards were being applied.
What does this mean for Google? I mean, one thing it means, they've already said they're going to appeal. And we know from the Microsoft case that you referred to, that took a good long time, several years going up and down and finally settling. But what does it mean for Google in the long run, do you think?
It'll certainly be interesting to see. And I think the question is not just what it means for Google, but what it means for consumers and what it means for other businesses when it comes to businesses dealing with one another and businesses creating certain types of agreements. While this case specifically deals with some of Google's distribution agreements, it's likely to have some broader impact as well. It'll be interesting to see what the remedies phase actually looks like if and when we get to that point. As you mentioned, the case is going to be appealed and is likely to take several more months, if not years, to come to a final decision.
We have that remedies phase coming up in the fall now. And one of the things that Bloomberg has reported is the Justice Department is at least considering the possibility of asking to have Google broken up. Is that likely?
I think there's always a question when it comes to tech companies of what would a breakup actually mean and what would that look like? And is that something that's even truly possible in many cases? Oftentimes, consumers like the fact that their products are able to be integrated with one another. That's one of the things that consumers are looking for. We often see actually requests for more interoperability, not less.
Let's talk specifically about if they don't break up Google, what the possible behavioral remedies could be. And specifically, you mentioned the restrictive agreements that at least the judge found were restrictive with respect to Google paying Apple and others to have their search engine embedded as the default. Is there any pro-competitive justification for doing that? Wasn't that something that was pretty nakedly a way of really deterring other competitors?
We've seen default agreements reached in multiple cases, and the judge did continue to uphold Trinco and say there is no duty to deal. So it is important to recognize that there is a possibility to see these agreements continue in some way. The question is, was Google acting as a monopolist and abusing its ability to get these agreements? And this really is also going to come down to that question of, are the alternative search engines inferior products? If there's no price that Apple would pay to set Bing as its default, is it fair to say that they can't have Google as their default? What does that mean for consumers? Are we expecting consumers to get the inferior product when what companies are trying to do is provide their consumers, whether it's a smartphone company or a web browser, the product that they actually want? When we look to Europe, where they changed the way that defaults could be done, and when you get a new phone out of the box or go to a new web browser, there's not necessarily a default search engine. We see that consumers overwhelmingly still choose Google because it's the search engine that they want right now, and it's the search engine that is bringing them the kind of results they expect.
Let me play devil's advocate here, actually, in reading this decision, because I hear what you're saying, and there are findings that, in fact, Google is just a better search engine. But if that's true, why were they paying all that money? I mean, Google's a pretty smart company. They're not going to pay billions of dollars for nothing. And if they really are just a better search engine, they didn't have to pay any money. They would have been the default by default.
There continues to be a wide array of business decisions that go into these kind of complicated agreements. What we really need to be looking at is this a case where we see consumers being harmed? Is this a case where we see a company abusing its monopolist behavior? And if not, then we should really focus on the fact that just because a company is large and just because a company is successful doesn't mean that it can't engage in standard business practices that we would allow other companies to do as well.
This Google case was brought under President Biden and his administration by the Justice Department. We do have an election coming up, you may have noticed, in November, and we will have a different president. It will either be Kamala Harris on the one hand, or it will be Donald Trump at this point. Do we have any sense of what competition policy might look like under either of their regimes?
When we look at the previous Trump administration, they were highly critical of several of America's leading tech companies. In fact, many of the antitrust cases started during the Trump administration, or the investigations at least started during the Trump administration. Similarly, we've seen the Biden administration continue to be critical of big companies in general and really try and push this more European style antitrust approach. So I think regardless of who wins in November, we're likely to see continued scrutiny of large companies. And the question should be, is that good for consumers, and is that good for innovation?
Beyond the question of how much a consumer pays, because there are problems with network effects and things, is there an issue that we're not getting to see other competitors? They just never make it into the game at all. That's one of the claims, I believe, that was made in the Google case, that people just couldn't get into it. There may be a better, more innovative search product out there. We just never get to see it.
One of the things that we often see in technology sector, particularly when we're talking about these kind of antitrust cases, are questions of market definition. In the Google case, the judge very much locked into this kind of general search engine definition, things that allowed you to search and then go off-site was what he really wanted to limit it to limit the number of competitors. But if we look at trends, particularly amongst younger users, Gen Z and Gen Alpha that's starting to access the internet, they're really looking at video forward often. They're going to TikTok or they're going to Google's YouTube to do their searches, or they're doing much more specialized searches where they're not necessarily using those general search engine. That's something that's kind of changed with all users. And the judge in this case kind of pushed that aside to really only focus on general search engines. He said that couldn't be considered considered competition because you couldn't go off-site. But the question is that really the consumer experience? And this is also where AI comes up. Is AI going to be so revolutionary that this completely changes the way that we view what it means to conduct search? Is this is looking at a general search engine in a few years going to be the same as talking about video rental stores as streaming is coming about?
Jennifer, always great to have you on these antitrust questions. Thank you so much. That's Jennifer Huddleston of the Cato Institute. Coming up, violating Warren Buffett's 2 rules of investing with or without a QR code. That's next on Wall Street Week on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. Billionaire Gautam Adani founded one of India's biggest and most controversial business groups. After being rocked by accusations from short seller Hindenburg Research last year, Adani is now preparing for the company's future in a real-life succession story. Meet the family members he's handpicked to take over the business as we deep dive into the facts and rumors surrounding the Adani Group. Inside Adani, a Bloomberg exclusive replays all weekend, only on Bloomberg.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Finally, one more thought. Rule number 1, never lose money. Rule number 2, never forget rule number 1. So says Warren Buffett. Unfortunately, too many of us appear to forget both of Buffett's rules too often. Just this week, Ford lost $1.9 billion on its all-electric 3-row SUV when it concluded there wasn't enough consumer interest to make it work.
I talked to Ford CEO Jim Farley, and he said the new mantra is that any new electric vehicle must be profitable within its first year on the market. If they can't do that, it won't be approved. That's why they canceled this electric 3-row SUV.
Others are losing money for less auspicious reasons. Former Representative George Santos lost $374,000 this week when he agreed to pay restitution after pleading guilty to charges of wire fraud and identity theft. And if that weren't enough, he'll likely have to do some jail time as well.
It's clear to me now that I allowed ambition to cloud my judgment, leading me to make decisions that were unethical and guilty. Pleading guilty is a step I never imagined I'd take, but it is a necessary one because it is the right thing to do.
Carl Icahn is losing $2 million in fines he owes to the SEC for not disclosing enough about margin loans. But all that's a drop in the bucket of the $19 billion in net worth he's lost in the last 15 months.
Both Icahn and IEP have agreed to pay $1.5 million and $500,000 in civil penalties to settle these charges without admitting or denying the findings. Very interestingly, these go through December of 2018 to the present, and this was 51 to 82% of IEP's outstanding securities as collateral pledged to secure margin loans worth billions.
Many of us find ways to lose money that don't involve getting crosswise of the law. Buying lottery tickets, for example. State lotteries took in over $100 billion last year, which is good for the states, but not necessarily for those buying the tickets. Over a third of that money stayed with the states, which means the rest of us lost about $37 billion on the deal. Betting on sporting events has yet to catch up with the state lotteries, but it's moving up fast, with the American Gaming Association saying about $37 billion was wagered in the first quarter of this year alone, with over $3 billion of that going to those taking the bets.
For the leagues, this is a revenue stream at a key time for them because we're seeing that media rights. There's a lot of tumult, a lot of disruption, especially at the team level. So I think bringing in the gambling money to supplement that has been something that they've really leaned on.
Recently, sports has given us another way to separate us from our money. It's the purchase of name, image, and likeness of our favorite college football star. And as if betting on sports weren't enough, the football program at Oklahoma State University has found a way to make it easier for us to spend our money on those NILs. They now put QR codes on their players' helmets, so you can use your smartphone when you're watching on TV and purchase the NIL for your favorite player without having to go find it. Of course, it's not only about losing money. There's always the enjoyment you get from just being in the game, even if most of the money ends up going to the house. I'm no gambler, but I did have one great evening in Las Vegas when I spent a couple of hours at the craps table and actually ended up a little bit ahead of the game. But then again, I had the smartest, funniest, and best tutor there ever was, Nora Ephron, who taught me how to calculate the odds of the dice coming up on any particular number, and then how to use the odds to place my pass versus don't pass and come versus don't come bets, which actually worked, at least when she was with me. That does it for this episode of Wall Street Week. I'm David Weston. This is Bloomberg. See you next week.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
If you look at Reels, Instagram and Facebook Reels, both immensely popular, both growing a lot, those are really working not because the short form video format is special and new. It's actually been around for a long time. You remember Vine and the early days of short form video. It's because of GPUs, it's because of large models, it's because of advancements in recommendation systems. ByteDance is one of the really great companies at this. We also have made an immense investment in harnessing the power of modern models, large data sets, and modern hardware, NVIDIA's hardware and our own hardware, to build recommendations that make the products better and more engaging. Our advertising system is built on modern AI recommendation technology. So I always think it's interesting when people remark that like AI just arrived. It's actually powering already today a huge amount of the engagement and quality of our products.
This is the Asia Trade. I'm Sherian in Tokyo.
I'm Heidi Stroud-Watts in Sydney. These are your top stories this hour. Investors are watching Middle East tensions after Israel launches what it calls a preemptive strike on Hezbollah in southern Lebanon. A mixed open ahead for Asian stocks this week, featuring Nvidia's earnings and key inflation data from Japan and the US. The Fed chief's Jackson Hole speech all but locking in that rate cut. Plus, South Korea confident that Washington will keep helping it confront the nuclear threat from the north, regardless of the election outcome. We hear exclusively from the Vice Unification Minister.
Heidi, is all about Jackson Hole and what Chair Powell said. Of course, that pivot when it comes to that potential rate cut in September, saying that the time has come for an adjustment in policy. He sounded more confident about inflation being reined in. And of course, we will be watching those PCE, the Fed's preferred gauge of inflation, later in the week as well. But take a listen to what exactly he said.
The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks.
And that's really, as you mentioned, really what we're watching out for this week in terms of what's being seen as just a gradual reinforcement of these rate cut expectations, right, which is the preferred price gauge from the Fed. It comes, it's really a pretty heavy week, I should say, of eco data around the globe. But we also heard from other Fed speakers. Take a listen to what Austan Goolsbee had to say, particularly when it comes to the characterization of this part of the cycle and perhaps some further volatility on this way down.
I think that this reflects the reality of the economy, that we've got to keep our eye on the employment side of the mandate now. This is what the path down to 2% inflation looks like. You know, you got some bumps, but I think that side's looking a lot better.
Policymakers, of course, watching very closely the labor market data as well. And those comments on the cooling labor data are really what caught investors' attention. Take a look at how U.S. futures are coming online in the Asian session. A little bit of downside after we saw stocks and bonds rallying on the Friday session. The Magnificent Seven leading those gains. NVIDIA reporting earnings later in the week. Of course, that's a big one of this earnings season. And we saw the two-year yield also breaking through the 4% level. But take a look at the dollar index, which is unchanged at the moment after we saw that significant decline over the past few weeks. Take a look at how Asian futures are coming online. Of course, we had a lot of fluctuation in the Japanese market, given that Governor Kazuo Ueda was also speaking in Parliament on Friday. We saw gains on the Nikkei for 2 consecutive sessions. We could see a little bit of downside at the open in Asia, down 0.7%. In the future space, we're seeing a little bit of upside for Australian futures at the moment, but the Japanese yen holding below that 144 level against the U.S. dollar. But Heidi, of course, we'll be watching very closely all of the oil pricing, given that, of course, geopolitical tensions continue to rise in the Middle East.
We are really on edge, right? Let's get some more when it comes to the latest that we know with Bloomberg's Michael Heath. So really, we're seeing sort of this preemptive moves. It's been a few weeks of sort of, unease, and it does seem like things are starting to heat up again.
Yeah, well, heat up, or perhaps we might have a pause here for now as well. I mean, Israel obviously has struck Hezbollah positions. It was a preemptive strike. About 100 jets went in at 5 a.m. Israeli time, and they seem to have just preempted Hezbollah's retaliation for the killing of that senior commander. So Hezbollah then struck after, then did fire off a bunch of missiles and drones, which haven't done a lot of damage. One Israeli soldier was killed, and Hezbollah seems to be indicating that that's the first stage of its retaliation for this. So we're going to probably have a bit of a period of calm here. But again, it's a sort of a credit to the Israeli intelligence agencies that they've managed to track this down and cut off at least part of this attack that's occurred. At the same time, though, we've got peace negotiations still sort of going on in Cairo as well. I mean, how much you can read into that, I'm not sure whether much will come out of it. But what seems to be happening, and certainly with this Israeli preemption and the response from Hezbollah, as we've seen from both Iran and Hezbollah, that they talk a good game, but they don't really overstep the line in what would sort of send us into a regional war. Now, you never say never in the Middle East. Anything could happen, immediately after. But at this stage, that seems to be what it looks like.
You mentioned Cairo. The U.S. has also stepped up its presence. What can you tell us about the international reaction so far, and what movements we could expect to see in the coming days?
Yeah, Sherry. I mean, the US has moved aircraft carriers closer to the region. It's fairly obviously trying to deter Iran, which still says that it plans to respond to the assassination of a Hamas leader in Tehran. And so, yeah, and then we have these talks going on as well. So, look, the US is very hopeful on this. Hamas and Israel, do they benefit from this going on? I mean, the issue is Prime Minister Netanyahu, he still has this right-wing cabinet. The ministers that help keep him in power have no interest in a ceasefire, etc. The talk is also that Israel wants this corridor that separates Gaza from Egypt to stop smuggling going on there. Hamas obviously wants Israel out of the whole of Gaza. So the same sort of issues still keep cropping up. Now, it's going to take something special to bridge that gap, which has been the same sort of issues that have been going on for the past 3 months or so. But certainly from all sides, the worry still remains, what will Iran do, and will Hezbollah follow up here again?
As you say, there's keenness to reach the ceasefire, but a lot of sticking points, and certainly there's some doubts that it will get done right. Has there been much sort of thought on what happens after a ceasefire, if it does happen to be, a semi-permanent or permanent one? Is there any thought about, what the sort of reconstruction view might look like, given the number of settlers that we know are in the area?
Yeah, that it's hard enough to sort of get to the deal, but the next stage, the Biden administration's dream is that from there they start to move to some sort of broader agreement, which would lay the basis of a Palestinian state. But that just seems so far off now that it's very, very difficult to see that occurring. Basically Gaza's been leveled, so the amount of money that's going to be required there, presumably Saudi Arabia has tapped these countries as well, but they're going to want to be confident that there's a secure, that things are sort of stable there and they're not pouring money down the drain as well, in terms of a flare-up in fighting again that leads to more destruction. But that still, where we get to after here seems so far away as well, just because it's taken so long to try to even get this close to the negotiations, and we still seem a long way apart.
Back at Marco Hood there with the latest. Let's get some analysis when it comes to how all of this is playing out with global risk sentiment and, of course, what it potentially means for global energy markets and oil prices. Diana Messina is joining us here in Sydney. Diana, taking a look at, I guess, the implications of geopolitical risk across the Middle East, markets are very good at, discounting risk at the moment, right? Do you think there is that sort of volatility hanging over, in particular when it comes to the inflationary impact of energy markets becoming disrupted?
I think in the last few months, we've seen that markets are probably a bit less sensitive to those risks in the Middle East than perhaps they were around October or November last year when the conflict broke out. We haven't seen oil prices tick up much higher on increased risk when we do get a flare-up in the region. So I think the major factors that are driving markets are more around what's going on with interest rates and what the Fed is talking about in terms of its projected outlook for rates the next 6 months.
And of course, Chair Powell couldn't have been sort of clearer, I guess, in the sense of what's to be expected. The market always sort of wants more, though. Do you think it's sort of pretty steady travels going into September and the rest of the year from here in terms of Fed policy and the implications for Asia?
What was missing, I suppose, from Powell's speech and also from what the other Fed members said last week was basically around the level of movements that will happen. So are we going to get a 25 or a 50 basis point cut in September? And then what is the outlook from there? How many rate cuts should we expect over the next 12 months? That was still unclear from all the communication that we've had from the Fed. So basically it just says that the Fed is very data dependent and it will shift policy based on as they've always been, but probably more so now in this cycle, because I think a lot of the central banks are sort of going a bit blind because this cycle is a little bit different to some of the more recent ones that we've had.
And I guess the question is which data points, right? Because we have one jobs report and 2 inflation points also coming up, but we continue to hear this narrative around the cooling labor market and the concerns around that.
Well, it was very clear from Powell's speech that they are concerned about the labour market right now. They don't want to see too much further cooling. The problem, though, is in the US, when the unemployment rate starts going up, usually it goes up quite quickly and to a much higher level compared to where it bottomed at. So this is where investors are finding the risk, that they're worried the unemployment rates are 4.2%, but it could easily go to 4.6 or 5% in the next 12 months. The Fed doesn't want to see that.
We have seen the manufacturing numbers around the world also weaken, and given that it's sort of a services indicator as well, how much of a concern is this given the sheer size of the service industry in the United States?
Well, the issue with some of the PMIs that you're speaking about, Sherry, is that usually services tends to take its lead from what happens in manufacturing. So the fact that manufacturing is now in negative, it's contracting around the world, and in particular in the US and the Eurozone, that's a risk for the services sector, because it means that services activity is probably likely to soften over the next few months. And that means that growth is going to cool in the US as well. Now, part of that is expected because we've got high interest rates. But the issue is that how much will growth slow? We don't want to see a recession occurring or a major downturn, but obviously that's a big risk in the next 12 months. There's probably a 50% chance of a recession in the US.
And talking about manufacturing, let's talk a little bit about semiconductor manufacturing. We have NVIDIA results coming up. This seems to be the big one of the season. Will you be paying close attention to this? What will you be watching out for?
Absolutely. It's probably the most important company in the world right now, and it will give a good, leading guide to the sentiment around the tech industry right now. In the last few weeks, a lot of the volatility that we had in share markets, and one of the big reasons for the drop in global shares, in particular the US, was the fear that the tech sector had made too many gains, or that share prices had kind of gone too far. So I think it will kind of set markets up for what to expect for the tech sector. That's 40% of the US S&P 500. So it will be quite important in terms of what the forward earnings projections are and how they come in relative to analyst expectations.
Have you changed your view on China at all? I mean, it seems like a sort of a steady managed slowdown is almost where policymakers are comfortable being at the moment.
The Chinese economy is very diverse right now. So there are parts that still look very concerning. Property investment is still down 20% year on year. Consumer spending is still soft. That has negative implications for Australia because we used to rely on a lot of Chinese tourists to come in, and they haven't gone back to their pre-COVID levels. At the same time, parts of China are doing quite well. The new economy, so electric vehicles, solar panels, fixed asset investment, some manufacturing. There are parts of China that I think we shouldn't get too negative on. I think 5% growth for the Chinese economy looks quite reasonable. What I guess I'm more worried about is what happens to the iron ore price. If we see some further drops in the iron ore price, that would be negative for Australian income from a trade point of view. But so far it's holding up around the $90 mark. So I think at that level, it's okay in terms of the revenue that is brought into Australia.
You talked about some of the parts that are doing well when it comes to the Chinese economy. Things like EVs, solar, new economy. Xi obviously needs to rely on this to rejuvenate growth. These are also the targets for potentially a new US administration or more of the coalition of Western powers that have already been quite irate by this. Is that a risk, do you think, for China?
It's a risk for China, but also for the rest of the world, because the US is talking about not just imports on Chinese products, but also on all imports. So some of the cars that come out of Europe, this has been a focus for the US administration the past 4 years as well. What's interesting about Trump's rhetoric, though, is he's talking less about actual tariffs and more just about expanding US manufacturing and bringing more jobs into that sector. So I sort of wonder if he was using the tariff route as sort of a bit of a negotiation, and he will be using that as a tactic if he gets reelected. Whether we actually get those tariffs put in place, or whether some people think that he might potentially get China to invest directly into the US economy. So I'm not actually sure if we get a Trump presidency, if we get those tariffs put in place.
Diana Messina, Deputy Chief Economist at AMP, here with us. Coming up next on the Asia Trade, the CEO of e-scooter startup Lime joins us live. The Uber-backed company entering the Japanese market. We'll also be talking market strategy with VBP and ANZ. Traders are debating now, of course, the size and path of the Fed's rate cuts and weighing the escalating tensions in the Middle East too. This is Bloomberg.
up-to-the-minute political news, whenever and wherever it happens. I'm Joe Matthew at the Democratic National Convention in Chicago, and this is Bloomberg.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Earnings season is here.
You're seeing back-to-back billion-dollar-plus quarters.
The forward indicators were so positive.
Bloomberg is first to break the numbers.
Texas Instruments out, folks.
Goldman Sachs.
Taking a look at Mattel.
There is something for everybody.
With the smartest insights.
People are whitewashing AI.
Wallets are under pressure.
We are committed to EVs. They're going to happen.
Earnings season in full swing.
We will have full and instant analysis.
Continuing coverage on Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Well, the messaging app Telegram has questioned the grounds for the detention of its CEO. Pavel Durov was taken into custody in Paris, at the airport over the weekend. Our tech reporter Annabelle Drillis joins us now. So what exactly has happened? Because there's obviously some rules in terms of how long he can be detained for. That can be rolled over. Have we heard about what the underlying sort of allegations might be?
Yeah, well, we actually have seen that detention already rolled over, which means that he could be facing court on Monday. But just backtracking a little bit and talking about what happened over the weekend. So Pavel Durov, he's someone who established Telegram back in 2013 with his brother. He's Russian by birth, but we don't actually know if he's given up that citizenship. It does play into the story a little bit later on. But essentially, he was detained at Le Bourget over the weekend, which is an airport on the outskirts of Paris. All of this was first reported by the AFP, but they're saying that there was suspicion that he failed to take steps to prevent criminal use of Telegram. Now, Telegram as a messaging app, many people would be familiar with it, but it has been often linked to extremist activity online. It's seen as being quite light touch on content moderation as well. And that's a way that this really misinformation, for instance, can kind of spread like wildfire on it. And so authorities are becoming much more aware of this now. And we saw, for instance, the UK, for instance, talking about it and its role and its prominence in those anti-immigrant riots back in August, earlier this month. Now, the French authorities apparently are as well taking notice here, because the AFP says that OVMIN, which is an agency set up to combat violence against minors, they're the ones that are said to have established this arrest warrant for Durov.
What have we heard from Telegram?
Yeah, they actually put out a response in the last couple of hours, and kind of, as you might expect, they're saying that essentially that they abide by all of the laws in the EU, that they do actually have high content moderation standards that are improving as well. They do make note of that in their statement. They are saying that the CEO has nothing to hide, that he travels across Europe frequently, and that they're also, you can see this response here, but they're also awaiting a prompt resolution of the situation. Toncoin, which is actually a cryptocurrency linked to Telegram, did slide pretty significantly off the back of this, down more than 20%. So there is a clear market reaction and nervousness around this as well.
So this has caught global attention. Authorities are now involved. So what's next here?
Well, as Heidi was saying there before, that we did see that arrest warrant extended, and so it does mean that Durov could face the courts on Monday. We are as well hearing from the Russian embassy in Paris, and that's what I was saying before. Durov is Russian by birth, rather. He does have citizenship in France and the UAE now. It's unclear whether he's renounced his Russian citizenship, but we are still hearing from Russian officials, and they're saying that they do want an explanation for the reasons, and also demanded that they ensure the protection of his rights and provide consular access. So certainly very much a moving story, but it does seem that we'll hear a lot more perhaps later Monday if Durov does appear before the courts.
Annabelle Drillis there joining us from Sydney. And we have more top stories on the corporate front. New Boeing CEO Kelly Ortberg faces questions over the future of the firm's Starliner program after NASA turned to SpaceX to return astronauts stuck on the International Space Station. NASA announced the decision after weeks of testing and debate over Boeing's faulty spacecraft. It's the latest blow for Boeing in a year that's also included a cabin blowout, federal investigations, and an executive shakeup. China's top oil refiner Sinopec has reported a marginal increase in first half profit. The company says its net income for the first 6 months reached $5 billion, marking an almost 2% gain from a year earlier. That's after better performance from its upstream operations offset weakness in refining and petrochemicals. And coming up next, our exclusive interview with South Korea's Vice Unification Minister on how the U.S. elections could play out for relations with the North. This is Bloomberg.
Why should I want to invest in the pharmaceutical industry? Is it going to continue to grow as it did last year? And what about your own company? Do you think it's going to have good growth prospects over the next couple of years?
I think the reason to invest in the sector is the science. I mean, when you look again, if I go back into the history, for most of the last century, we were only giving people pills and small molecule drugs. Then we discovered that we had this whole world of biologics and we could treat diseases with biologicals. More recently, we've discovered that we can reprogram your cells. We can edit the genome. We can use these RNA therapeutics to completely transform areas of medicine. Those technology areas are at their very nascent stage. And what we're going to find is they're going to open up whole new areas of growth from our business standpoint and a human health impact standpoint. We hope that as we work in our areas like cell therapy and RNA therapeutics, we will also be able to climb to a whole other level of market cap over time.
Chicago Fed President Austin Goolsbee says it's time for the central bank to pay more attention to the cooling U.S. jobs market, with inflation now easing toward the Fed's 2% target. Speaking to us at Jackson Hole, Goolsbee declined to say whether he would favor cutting rates at the Fed's September meeting.
I think we set a rate pretty tight more than a year ago. Inflation's kept coming down, so in the real rate sense, we've been tightening. And when the conditions are not overheating, you got to be really careful with that kind of passive tightening. Seemed pretty definitive, the statements that Chair Powell made there in his remarks. And I think that this reflects the reality of the economy, that we've got to keep our eye on the employment side of the mandate now. This is what the path down to 2% inflation looks like. You know, you got some bumps, but I think that side's looking a lot better.
As you say, you've been worried about being too tight for a while now. The chair did not discuss how big of a cut might be coming for the first one. What do you think the economy needs? Do you need to see 50 basis points?
You know, I don't like ahead of time, as you know, picking out specific numbers. In my view, the SEPs over the last year have made pretty clear that almost everyone on the committee thinks that conditions will show inflation coming down, the unemployment rate going up gradually and settling in, and that there will be multiple cuts over calendar 24 and calendar 25. And that feels like what the path is from conditions so far to me.
Well, we start down the golden path, or as the chair would say, the golden road to unlimited devotion. How fast do you move? Do you think you need to be gradual? Are you open to bigger moves if the data suggests?
Look, you've seen many times the size of the table. It's a big enough table in the FOMC room that you can fit everything on the table. I think we should always put everything on the table, and what will warrant the speed at which we cut rates or how much we pause on the cutting will be determined by how the totality of the conditions show. I think there are definitely warning signs, though there are also signs of strength. So on the warning category, the unemployment rate drifting up is definitely a warning sign. If you look at the delinquencies on credit cards, if you look at small business defaults, all of those are in the warning category. On the stronger category, GDP growth's been pretty robust. Consumer spending still pretty strong, driven by, I think, this robust wage growth. So we just got to watch the whole thing.
Chicago Fed President Austin Goolsbee there speaking with Bloomberg's Mike Mickey at Jackson Hole. Really the ponderance of the Fed's path forward now that Jay Powell has very clearly signaled the path, I guess, if not the scale of what they might do, is what we're watching when it comes to the start of trading here in Asia. We're seeing dollar yen in particular pushing lower on Monday, even before those fixings are sort of out of the way. So clearly we're seeing not just equity bulls, but also yen bulls focusing on that messaging from Governor Ueda that more policy tightening lies ahead. This is Bloomberg.
People ask me all the time, what is the key to being a really good investor? I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
To be a value investor is to pay less than the business is ultimately worth. And if the price 2 years from now should be considerably higher than it is today, the stock is likely undervalued.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Bank of China says its president Liu Jin has stepped down after a little more than 3 years in the job. Let's bring in our China correspondent Mingmin Lo in Hong Kong. So what else do we know about the reasons for this resignation?
Yeah, we don't have a lot of insight as to the reason behind his resignation. What we know is from a stock exchange filing that the company had filed saying that he had resigned. This was a few days after he was absent from a board meeting. The stock exchange filing said that there was no disagreement with the board and there are no matters that need to be raised to the attention of shareholders. And in the meantime, the current chairman, Ge Haijiao, will be acting president for the bank. Now, the broader context here is that back in late April, the central government had kicked off an anti-corruption probe into the financial industry, targeting 34 entities, including the central bank, the regulators, some of the big state-owned banks, for instance. It was meant to conclude in about 3 months, which would have been around late July. And at the same time, one former chairman of the BOC, Liu Lange, he was also on trial earlier this year on corruption charges for accepting bribes of about $17 million from 2010 to 2023. That's according to prosecutors. He was put on a probe in March of last year. And we know that presidency has been kind of doubling down on this anti-corruption probe as he attempts to rein in risk in the financial industry. And the last time we saw such a huge probe was back in 2021 that had sent shockwaves through the financial industry, with over 130 financial officials and executives that were ensnared in that probe, some of whom had been sentenced to suspended death sentence, and at least one had been executed as well. So this is the broader context at which this is happening, although we really have no idea what led to the resignation of Liu Jin just after 3 years after he came into that role.
We're also hearing from the PBOC talking about these financial risks across key areas that they're being, resolved in an orderly manner. We know that these stress tests are ongoing as well. What more do we have in terms of the context of what's going on and what risks they have identified?
Yeah, so the PBOC Governor Pang Gong-shen had an interview with state media. It was aired over the weekend, and he gave us a little bit more details as to what the PBOC plans to do to support the economy. He did mention when it comes to those risks, the number of high-risk small and medium-sized banks have halved from its peak. In the meantime, he said the PBOC will be trying to promote credit growth, and this comes after we had that first contraction in 19 years when it comes to new loans to the real economy. He also talked about the need to maintain stability of the yuan in a balanced manner. And so far, we have seen the PBOC really drawing back support of the yuan, suggesting that they maybe don't want the yuan to strengthen too quickly. This comes also as the foreign exchange regulator had been surveying the big banks to find out what clients are saying about the impact of a stronger yuan on export orders and profits as well. And he also talked about stable reduction in financing costs. We've seen the PBOC try to shift emphasis more to the 7 days reverse repo rate to try to mimic what other central banks do. It had cut interest rates unexpectedly back in July. We're expecting more cuts later this year, and some economists expecting maybe 10, 20, even 30 basis point cuts later this year, depending on how the economy goes. And now local reports are also saying that the central bank is looking to conduct stress tests for these banks when it comes to bond risk exposures to see how they would respond if in a hypothetical scenario where the interest rates are raised maybe 10, 20, even 50 basis points, and whether they will be able to respond well to that kind of pressure.
Bloomberg's China correspondent Min Min Lo there with the latest on China. As we continue to watch, of course, geopolitical dynamics across Asia ahead of the U.S. presidential elections. South Korea says it expects to work with whoever it takes the White House to confront the nuclear threat from North Korea. I spoke with South Korea's Vice Unification Minister Kim Soo-kyung in her first interview with international media and asked how Seoul is preparing for a new administration in Washington.
Recently, I read the news that the U.S. Democratic Party platform removed the goal of denuclearization of the Korean Peninsula. So people in South Korea is kind of worried what happens after the president election in the U.S., but we strongly believe that our alliance between the U.S. and South Korea is stronger than ever. And regardless of the outcome of the president election, we are going to deter North Korea's threat of nuclear weapons based on the strong alliance between two countries. So we are not that worried about what happens after the U.S. election.
Especially if you look back a few years and under the Trump presidency, we actually saw more dialogue between Washington and Pyongyang. But then at the same time, there was a little bit of concern that Seoul had just been taken out of the equation. Is that a concern that's still around here in South Korea, depending on who wins?
We have believe that we have the strong systematic alliance between two countries. So no matter who is going to be elected, I think, or our government believes strongly that those two countries will closely work together to deter North Korea's nuclear programs. So we are not much worried about it. We are going to take the lead in implementing peace on the Korean Peninsula. We are not going to be ruled out.
The global order seems to be changing now. There's a lot of movement, especially with the ongoing war in Ukraine. It's been really interesting to see the closer relationship between North Korea and Russia. What are Seoul's thoughts about that?
So as you know, recently Russian President Putin visited Pyongyang in 24 years for the first time, and they signed a new treaty and upgraded their bilateral relationship centered on military cooperation. And we are worried that, or there is a deep concern that this kind of military cooperation can happen not only in times of emergency, but also in times of peace. So we are so much worried about it. And we believe that we have to work closely together with the international community and to deter nuclear threats from North Korea, and any kind of military cooperation between those two countries that strengthens the military capacity of North Korea is a violation of UN Security Council resolutions. So we need to work closely together with the international community, not to make bad things happen in between those two countries.
North Koreans have tried to escape the regime for a very long time, which is why we've seen so many defectors over the years, and yet that number seems to have sharply dropped. What role does Seoul think that China is playing there?
China is the place where many defectors are going through to come to South Korea. So if China is tightening control over these North Korean people and force them to go back to North Korea, then the number of defectors drops. If China closes their eyes to these North Korean people just go through their land, then we have higher number of defectors. So China is kind of a very important factor in deciding the number of North Korean defectors coming to South Korea. And recently, like defectors from the elite group, we call it, for example, diplomats or students or training company workers who were dispatched abroad. The number of these elite group defectors is now increasing. So this means that there is a high demand for defection, but it is really hard to cross the border because North Korea is tightening control over the borderline. So it is almost impossible to cross the China and North Korea borderlines to defect from North Korea.
South Korea's Vice Unification Minister Kim Soo-kyung there. We have more ahead on the Asia Trade. This is Bloomberg.
The top names in business are on Bloomberg.
technology has a big role to play in healthcare in multiple ways, and we're very heavily invested in that. The whole interface between tech, AI, biopharma is a very interesting space. Much of the healthcare industry, particularly if you look at the UK, you look at the US as analog, it's actually quite staggering. Stuff is on paper still, and forget AI. You need a basic technology adoption.
Nobody covers business like Bloomberg.
Jumpstart your trading day with 2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
Bloomberg Open Interest, weekdays at 9 a.m. Eastern, only on Bloomberg Television.
These assets are trading ahead of the Japan Open. We are seeing the Japanese yen holding steady. This, of course, as we had the Nikkei and the topics gain ground for 2 consecutive sessions. It's really all about the Japanese yen and its strength right now against the U.S. dollar, given, of course, what we heard from Governor Kazuo Ueda last week, and investors just trying to digest what's happening with Fed policy as well. Bloomberg's Japan and Korea economy and government editor Yuko Takeo joins us for more on this. And really, Yuko, it's such a volatile time for the Japanese yen, right? And this is a currency that we weren't watching that closely years ago. And now you have so many different factors just being weighed by markets.
Sure. There's quite a few factors that's moving the yen at the moment. If you look at things this morning, one factor is obviously Fed Chair Powell said on Friday that he essentially said that a rate cut's coming next month. Also, developments in the Middle East has traders essentially being worried about further conflict erupting in the region. And lastly, of course, on Friday, BOJ Governor Ueda also spoke, and he essentially made investors aware that a rate hike is still on the table. So those things are together strengthening the yen.
What is going on with Governor Ueda? And really that hearing a special session in Parliament on Friday at a time when everybody else was in Jackson Hole, wouldn't this have been a really good time to speak to international markets?
Right. It really would have been. And he missed out a session where he could have spoken to the international markets for a session that ended up not making too much news. And it's probably good for him in the sense that he probably did not want volatility at that point. He kind of succeeded in being not too dovish, not too hawkish. So from the BOJ's perspective, yes, it worked out in that they didn't cause any further volatility there, but he did miss out on a chance to probably talk to the international markets there.
Yeah, we'll be scouring any chance that we get when it comes to those comments by BOJ Governor Ueda. Our economy and government editor Yuko Takeo here with a look at what's happening with the Japanese markets. But let's stay here because we have another story that we're tracking in this country. E-scooter company Lime has just launched its service in Japan in a foray that pits the Uber-backed startup against a homegrown rival Loop. Let's get more on Lime's Asian ambitions with CEO Wayne Ting, who joins us now from New York. Wayne, great to have you with us. I've seen these Loop scooters since I arrived here in Tokyo. Tell us how your company could have a competitive edge against an already established name here.
Yeah, thank you so much for having me. I think Lime is the world's leader in micromobility. So think about e-bikes and e-scooters. We're in 300 cities around the world, 34 countries, and we are the market leader in almost every geography. We're the #1 player in Europe, in North America, and in Australia and New Zealand. And the reason why we're the leader is because we've always developed our own hardware in-house. And I think one of the big advantages that we will have and what we're bringing to the Tokyo market is best-in-class hardware, best-in-class scooters and e-bikes. In fact, we're bringing a sit-down scooter that we just developed to the Japanese market. All the other competitors buy the same off-the-shelf, often cheap e-bikes, e-scooters. And I think when Tokyo residents take a chance on a Lime scooter and e-bike, they're going to experience the difference in the quality of the hardware that is designed for safety, rideability, and sustainability.
So when you retreated from the South Korean market recently as well, so why Japan and what makes Japan different then?
Yeah, so we left the Korean market at the beginning of COVID. It was a very difficult time for any form of transportation business, and we had to pull back to make sure that Lime is in a strong financial position. And I would say the last 2 years, we actually delivered record top line and record profits. Last year, our global profitability neared almost $100 million. And this is a great time for us to invest in that momentum. And this is why we're taking a look at East Asia again. The other thing I would say that differentiates that Japan actually has a more clear regulation. We would love to go back to Korea if the regulations in South Korea could be updated to ensure that there is a high bar for operators, that it is not so easy for anybody to launch operations locally. And it would ensure a level playing field with other operators. We would love to, as part of this launch in East Asia, to take another look at Korea if there's updated and more fair regulations. But we think that given the global momentum that Lime is achieving through record profits and record profitability, as well as new e-bikes we're launching this year, we think it's a perfect time to take a look at Japan and the East Asian market again.
Wayne, it's interesting. I read that you were talking about the last thing you want to feel like is expanding too fast and feeling like a nuisance, right? And I think a lot of people in a lot of these markets, including in Australia, be it you talk about scooter sharing or just bicycle sharing, is that it does feel like a nuisance in the way that it seems largely unregulated. Do you think regulation is key to making this a sustainable kind of business? And I suppose other than Japan, which other markets do you see that level of clarity on the regulatory front already in place?
Yeah, we think regulations is super important. And actually, in almost every market, there are strong regulations and very high bar for which operators can win the right to operate. In Australia, for example, there are competitive RFP processes in all the cities, whether it's Brisbane or Melbourne, that really regulates not just who can operate, but also the rules of the road once you're there. And we think good regulations is crucial to ensure that we are winning over not just local residents, but as well as people who don't use Lime or don't use micromobility. So we are big supporters of good regulations, and we work hand in hand with local city officials to ensure that we have good, fair regulations in all the markets we're in.
Which other markets would you be looking at next?
So this is a big year of expansion for Lime because of the momentum that we're seeing. So in addition to Japan, we also launched Greece this year to capture a lot of the summer tourism in the local market within Greece. We think almost every big city can benefit from micromobility because we really bring a cheaper, greener, oftentimes faster mode of transportation. Any city that suffers from parking issues, congestion issues, and every city in the world suffers from the challenges of climate change. Every city that goes through this can benefit from a greener transportation system, which is what Lime brings. So we think we're in 34 countries now, so there's still many, many markets where Lime is not in. We are already in a lot of countries and cities, and we think every country and city can benefit from the type of green transportation alternatives that Lime offers.
You're backed by Uber. Tell us a little bit about your funding structure, if you need to raise more capital at some point, and what are the plans right now for how you plan to really return to actually really boost your business and profitability, I guess.
Yeah, so we are very lucky to have the backing of Uber. Uber is our biggest investor, and we have a global partnership with Uber where you can even book a Lime scooter and bike directly in the Uber app. We're very grateful for Uber's support, and we think that's going to continue to be a very, very strong partnership for us. The great thing about what we achieved last year, almost $97 million in EBITDA, is that we don't need to raise any more money. We have a strong balance sheet and a strong P&L. And as we continue to improve our profitability, we can fund our own growth through the profits that we generate, which is why we are looking at new countries this year without raising new money. We feel very, very good about our financial position, and we think we can continue to fund our growth and expansion through our own profitability. And we're going to continue to build new hardware, better operations to ensure that we continue to expand our margins.
Sounds like it's a good time for an IPO, maybe.
Yes, well, I think when we think about IPO, there's two factors. One is our own financial performance and making sure that we're ready to live as a publicly traded company. I certainly think the financial results that we delivered last year continues to put Lime in a strong position to live as a publicly traded company. The second factor, however, is the macro situation with IPO markets. And you guys know better than I do, but it still feels quite choppy. So we are doing everything we can to grow the business, to invest, to ensure that Lime is the global leader in micromobility. And I think the investments this year in Japan and Greece, the new hardware that we're building, all builds towards that global leadership. We're going to continue to make our P&L better. And when the IPO market is back and open, we'll be ready to take advantage of that.
Wayne, great to have you with us. Wayne Ting, who's a Lime CEO. You can catch Japan Ahead every Monday here on The Age of Trade. This is Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Big earnings week for Australia's minerals sector. Iron ore heavyweights BHP, Fortescue among those who are reporting results. Paul Allen's here with a preview. So what are you watching?
Yeah, well, BHP, the big one tomorrow, and expected to be a pretty healthy set of numbers considering underlying profits supposed to hit a record. Well, it's expected to $13.5 billion. And this is despite pressure from the slipping iron ore price. To that regard, we've got Fortescue later in the week, and of course iron ore is its only product, so operating profit there is expected to be flat. So the outlook here is a bit concerning, especially when it comes to China demand, so we'll be looking for commentary around that. MySteel has just reported that only 1% of Chinese steel mills are profitable at the moment. Goldman says that the iron ore outlook fundamentally remains bleak, so not exactly ringing endorsements here. The big players, though, are insulated to some degree. They've got pretty low costs of production, but others not so much. We'll be hearing from a smaller player, Minres, later in the week. The AFR just reported that one of its mines is only making $8 profit per tonne, even with iron ore around the $100 mark. So if the prices keep falling, and they are expected to, some of these marginal players could be in a bit of trouble.
Pilbara minerals numbers are pretty confronting for the full year. How much pressure does this kind of tell us they're under at the moment?
Yeah, Pilbara, the lithium miner, saw a full year profit slump, net income down 89% to $174 million. Weak lithium prices in this case, so down 70% during the period. There's a lot of supply and pretty bad timing as well. Pilbara just opened the world's largest lithium sorting facility and is weighing an expansion of that. The CEO said this is strategic, it's counter-cyclical, it's going to diversify the portfolio. Well, it'll do all of those things, but in the short term, it's weighing on the bottom line. Later this week, we'll hear from Woodside, South32, the rare earths miner Lynas as well. And of course, all of these companies facing the same sort of thing, weaker commodities prices.
Bloomberg's Paul Allen there. We'll be getting, hopefully, some of those answers from the Pilbara Minerals CEO, Dale Henderson, when we talk to him about that plunge in full-year net income, the broader outlook. That's coming up at 9:30 a.m. Hong Kong time, 11:30 here in Sydney. But we are just minutes away from the market opens in Sydney, Seoul and Tokyo next. We're expecting Asian stocks broadly to get that bump from a little bit more assurance after Jackson Hole, after Chair Powell's speech, really talking about the path to, signals of that path to US interest rates coming down from next month. We are seeing some upside when it comes to futures from Hong Kong to Sydney. Equity benchmarks on the rise. Tokyo shares, though, may see a little bit more volatility. This is Bloomberg.
Any of us in the room could have a stroke or develop MS or develop ALS, a condition that stops your body from working. We're all at risk of that. And neurology, I'm a neurologist. It's been the field in medicine where there hasn't been many treatment options. And so neurotechnology is having this moment now in medicine where it's becoming kind of the final frontier of medicine and a lot of excitement, but the challenge with cracking the skull and delivering technologies that way is that the infrastructure is not set up for scale, for applications of that technology. Cardiology has shown over decades that you can now deliver millions of stents or pacemakers a year. But so we're translating what's known from cardiac into neuro. And I think we're entering a period where the treatment opportunities for neuro delivered through a catheter into the brain are going to become vast.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now. We have Take-Two numbers.
Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching The Close.
Welcome to Balance of Power.
This is Bloomberg. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens. After Heidi, we saw U.S. stocks and bonds rallying. Of course, the expectation of that rate cut come September. Very clear with Chair Powell's speech in Jackson Hole.
Yeah, and I suppose the only point where perhaps markets want to see more clarity, wouldn't we all, is really about the point of the magnitude, the scale, right? He refrained from talking about whether it's going to be 25 or 50, suggesting, as we've been hearing, that reaction from economists and investors that he will continue to be very data dependent. And interesting, I thought, hearing from Austin Goolsbee as well, talking about that this part of, the cycle on the way down is bound to be sort of peppered with some bumps and volatility.
Yeah, of course, we have seen that volatility, especially when it comes to the Japanese markets. Recently, we are seeing a little bit more strength on the Japanese yen, but this, of course, after incredible weakness for the month of July. And take a look at how the Japanese stock markets are coming online, with the Nikkei and the Topix gaining about 0.5% each. Of course, we saw also those gains in the past two sessions last week, as we had the Japanese yen also strengthening a little bit. We're holding below that 144 level against the U.S. dollar. We were listening to Governor Kazuo Ueda speaking in a special session in Parliament on Friday. Really not much new out of that conversation, but just more expectations that those rate hikes are still on the table. We continue to watch those JGB yields, a 10-year yield below that 0.9%. But really, it's about the conversation and what's happening over the Federal Reserve and the U.S. dollar weakness that we continue to see. Take a look at how the Korean market is coming online on the back of that dollar weakness that we are now seeing at the weakest level against since January of this year. The Korean won also a little bit stronger on the back of that, at that 13.24 level, and the Kospi also rebounding from those losses that we saw in the previous session. Heidi, of course, Korean markets also trying to factor in where the BOK goes from here. We do have industrial production numbers later in the week.
Take a look at how we're setting up when it comes to Australia. And Sherry, we were talking earlier, it is a big week when it comes to earnings, particularly when it comes to the big miners, BHP among them. Pilbara Minerals had a fairly nasty set of numbers, came out earlier. Fortescue as well. So really getting that sort of proxy gauge of the weakness that we have seen coming out of China and Chinese steel mills. Take a look at what we're watching when it comes to just that staggered open here. Looking like we're sort of mildly optimistic. We have had quite a string of wins when it comes to the ASX 200, of course, taking a breather into the end of that week. The Aussie dollar is also a bit on the back foot, 67.87. Australian bonds, though, one to watch. We've seen this relentless rally when it comes to Aussie bonds, really showing really just how few traders apparently believe that the RBA will be defying pressure to stand firm on its hawkish tone. So watching for further commentary out of the RBA, particularly as we've seen the RBNZ really kind of capitulate, and now clear signals from the Fed there as well. We're also watching Endeavour Group as one to watch in terms of reporting earnings. Treasuries are holding pretty steady at this point as we kind of continue to watch the debate when it comes to the size and the path of rate cuts after the Jackson Hole pivot speech from Chair Powell. Also watching, of course, oil and some of the further developments when it comes to Middle East tensions. We're seeing that rise in Brent as those Israeli strikes on Lebanon really ratchet these tensions up higher. We have that seen that response as well to the preemptive strike on Hezbollah. So each of the sides saying the operations are over for now, but certainly we know that things can change very quickly in this area and in these markets, Sherry.
Heidi, not surprising, our next guest says an increasingly defensive posture makes sense. He's also downgraded Japan from overweight to neutral. With us now is Kieran Calder, Head of Equity Research for Asia at UBP. Great to have you with us. Defensive, despite the fact that we're expecting that rate cut from the Fed. What does defensive look like to you?
Yeah, good morning. So actually defensive because we're expecting rate cuts from the Fed. And I mean, the background is, so obviously on the weekend, it's game on for rate cuts, probably starting next month. And if we look at the last 5 aggressive rate hike cycles, when rates started getting cut, there's only two of those, 2 out of 5, where we didn't have recession within 8 months. And one, we were already in recession for 7 months in 1974, and then 1995 was the soft landing. So, the Fed is always aiming for a soft landing, and it's pretty rare. So we think, certainly given we expect a soft landing, as does the market. But given, year-to-date performance from markets which are, near all-time highs, we think it makes sense to be increasingly defensive into the beginning of rate cuts.
Does the macroeconomic backdrop matter for high-flying stocks like companies like NVIDIA? We're expecting those earnings this week. Would you position still in the tech space in the U.S.?
So there's always idiosyncratic names like Nvidia. So they're obviously at the forefront of a major potentially mega trend. We're of course closely watching what if they disappoint or not on later this week. So we still like selective names in U.S. tech, but again, if we go back to what sort of sectors and styles outperformed in the only other case of a soft landing after aggressive rate hikes, they were mostly defensive. So in the first 6 months after the rate cut started in 1995, it was healthcare, communication services, which was mostly telcos at that time, financials as well, and by style, it was really quality that was the outperformer in the first 6 to 12 months, and of course a subset of that being dividend consistency, consistent dividend payers. So we think these are the sort of styles and sectors that we would want to be overweight heading into the beginning of this rate cut cycle.
Kieran, what else are you sort of concerned about, right? It feels like the weakness out of China is largely ring-fenced for now. Are there any opportunities that you see as being compelling while valuations are low?
In China?
That's right.
Yeah. So for us, we have a structurally underweight view of China. We think that while the downside may be a little bit limited, they've been pretty aggressive in trying to put in a number of measures, especially to draw a line under the property sector. But for us, we think that there's much not to like still in China, and it's a little bit of a unknown. So we prefer to stay underweight in China.
What about sort of on the other end of the spectrum? Are you still constructive when it comes to India, or are prices just sort of too peaky at this point?
Yeah, so the issue with India is it's always looks expensive, but on the other hand, certainly compared to China, it does tend to deliver in terms of earnings expectations, and there's a much stronger transmission mechanism of GDP growth into earnings growth for the market. So, from that perspective, we like India as in terms of global EM, and we certainly prefer it to China, and we'd always be looking to add on weakness. But as you inferred, it's never and it's not now a cheap market.
These economies are all net oil importers, aren't they? I mean, how closely are you watching the geopolitical tensions in the Middle East and the implications for oil and oil-related stocks?
Yeah, so geopolitical situation obviously over the weekend seemed to have heightened, but maybe but is maybe limited at the moment. So, for us, this is something that's always in the background. It's obviously something that in the short term can move markets around and contribute to volatility and heighten the volatility that we would expect as the interest rate regimes change around the world. But overall, in sort of long term, geopolitics is not a main driver of markets, and we try to look past us. Of course, look past it. Of course, if we do get heightened oil prices, then importers of oil like Japan will suffer in terms of higher costs. But again, it's longer term. We don't see that as a major driver of markets.
It's interesting you say that soft landings are rare. Do you sort of rate the likelihood a little bit higher when it comes to Europe? Stocks there are doing quite well again after what was quite a difficult start to August. And I know that you're overweight when it comes to the likes of Switzerland and the UK on the rate environment.
Yeah, so we're kind of so we are overweight those two markets in Europe, but I think Europe proper, as it's defined currently, is we're a little bit more neutral on. The major problem with Europe is earnings, top line growth. So to get earnings growth in much of Europe, you really need to focus on taking out costs, and given the social structure of most of Europe's economies, that's not always easy. so these are some of the reasons that we're not overweight on on Europe proper, but we think that the specific cases of the UK and Switzerland against the rate cut environment there gives us a sort of tactical opportunity.
And Kieran, before we let you go, I know that we've gone all across the world, but I'm really curious about the Japanese yen and the carry trade unwind that we've seen. I mean, Governor Ueda had to speak in Parliament last week instead of going to Jackson Hole and trying to soothe the international markets. What did you take away from it? And sort of give us your sense of the broader direction and pace of the yen moves.
Yeah, so I mean, and certainly anecdotal evidence suggests it's the unwind is starting to rewind a little bit, but certainly. Look, I think the comments that he made at the end of last week were a little bit in contrast to the comments immediately after the rate hike at the beginning of August, where the Bank of Japan, of course it wasn't Ueda, but the Bank of Japan said they would not alter rates when markets are unstable, which by itself is quite an incredible statement because markets are mostly unstable. So I think he kind of tried to lay the case out that they are going to. They think that the economy is performing as they expect. The wage hikes are starting to support inflation in Japan, which in turn can support higher rates. But overall, we think they're going to continue to be very, very cautious. And I think we would be a little bit surprised if they moved at all during the course of this year. And of course, if the we see that rates in the U.S. tighten as we expect, then that'll do a lot of the work for the BOJ anyways in terms of the exchange rate.
Yeah, sure, those rate differentials, right? Kieran Calder, good to have you with us. Thank you so much for all your time, Head of Equity Research for Asia at UBP. Now, coming up next, our exclusive interview with South Korea's Vice Unification Minister on how the U.S. elections could play out for relations with the North. This is Bloomberg.
I think one of the dirty little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're going to get your money back. And this world where there's these disruptive companies that have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution. We think that there's a lot of opportunity with those businesses.
From the world of politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Believe that. Relative calm is holding in the Middle East after Israel's Sunday bombing raids on southern Lebanon. Israel says it took out thousands of Hezbollah missile launches based on intelligence that the Lebanon-based militant group planned imminent attacks. For more, let's bring in Bloomberg's Michael Heath. So it seems that's the term, right? Relative calm. Is it sort of done for now?
It seems like it, Heidi. I mean, Israel, as you said, conducted those preemptive strikes. Hezbollah subsequently fired about 200 missiles and drones and projectiles as well, which seem to have either been shot down or landed in not too populated places. That said, an Israeli soldier was killed in Hezbollah's firing there, but the head of Hezbollah, Nasrallah, has said that that's basically the end of their first stage of this response, and Israel has said the same. So it does look like calm is descending there, which is quite surprising given that, for a couple of weeks, we've been sort of building up, waiting for this response from Hezbollah after Israel assassinated one of its senior commanders. Yeah, I mean, it's sort of a testament to Israel's intelligence that it's managed to preempt this, because it could have been quite a major strike that Hezbollah managed to conduct, and in the end, it looks like it hasn't done much damage at all.
Mike, negotiations in Cairo have started for that potential ceasefire in Gaza, but how feasible is it that we might get any results given the escalating tensions in the region?
Yeah, Sherry, it's curious because it doesn't seem to have impacted the negotiations as such. They went ahead as planned, and they've since broken up, and it's kind of quite difficult to get a read on it. Obviously, nothing has been agreed. Hamas seems to be blaming Israel for putting forward new requests. The US, on the other hand, seems to be sort of optimistic that progress is being made. So it is hard to say. They don't seem to have directly influenced each other, even though to some extent they surely have to. I mean, at the end of the day, the way to sort of calm down Israel's northern border with Hezbollah is that Hezbollah has said it will stop firing these missiles once the deal is reached. But by the same token, if Israel feels that it militarily has managed to keep Hezbollah at bay, it's not so worried about that. What's going to happen with those talks now is they're going to continue, the Associated Press is reporting, they're going to continue at a lower level to try and bridge some of the differences, but it still seems to be stuck on a lot of the same issues that we've had before, of Israel wanting to keep some troops in the area to try to stop smuggling of weapons or Hamas fighters going into the north of the Gaza Strip, and Hamas obviously wanting all Israeli troops out, and for this to not only be a ceasefire but the end of the war. So the same issues seem to be at hand. We sort of seem in a bit of a deadlock here.
Bloomberg's Michael Heath there with all of the geopolitical tensions that we continue to watch, especially ahead of the U.S. presidential election. South Korea says it expects to work with whoever it takes the White House to confront the nuclear threat from North Korea. I spoke with South Korea's Vice Unification Minister Kim Soo-kyung in her first interview with international media and asked how Seoul is preparing for a new administration in Washington.
Recently, I read the news that the U.S. Democratic Party platform removed the goal of denuclearization of the Korean Peninsula. So people in South Korea is kind of worried what happens after the president election in the U.S., but we strongly believe that our alliance between the U.S. and South Korea is stronger than ever. And regardless of the outcome of the president election, we are going to deter North Korea's threat of nuclear weapons based on the strong alliance between two countries. So we are not that worried about what happens after the U.S. election.
Especially if you look back a few years and under the Trump presidency, we actually saw more dialogue between Washington and Pyongyang. But then at the same time, there was a little bit of concern that Seoul had just been taken out of the equation. Is that a concern that's still around here in South Korea, depending on who wins?
We have believe that we have the strong systematic alliance between two countries. So no matter who is going to be elected, I think, or our government believes strongly that those two countries will closely work together to deter North Korea's nuclear programs. So we are not much worried about it. We are going to take the lead in implementing peace on the Korean Peninsula. We are not going to be ruled out.
the global order seems to be changing now. There's a lot of movement, especially with the ongoing war in Ukraine. It's been really interesting to see the closer relationship between North Korea and Russia. What are Seoul's thoughts about that?
So, as you know, recently Russian President Putin visited Pyongyang in 24 years for the first time, and they signed a new treaty and upgraded their bilateral relationship centered on military cooperation. And we are worried that, or there is a deep concern that this kind of military cooperation can happen not only in times of emergency, but also in times of peace. So we are so much worried about it. And we believe that we have to work closely together with the international community and to deter nuclear threats from North Korea, and any kind of military cooperation between those two countries that strengthens the military capacity of North Korea is a violation of UN Security Council resolutions. So we need to work closely together with the international community, not to make bad things happen in between those two countries.
North Koreans have tried to escape the regime for a very long time, which is why we've seen so many defectors over the years, and yet that number seems to have sharply dropped. What role does Seoul think that China is playing there?
China is the place where many defectors are going through to come to South Korea. So if China is tightening control over these North Korean people and force them to go back to North Korea, then the number of defectors drops. If China closes their eyes to these North Korean people just go through their land, then we have higher number of defectors. So China is kind of a very important factor in deciding the number of North Korean defectors coming to South Korea. And recently, like defectors from the elite group, we call it, for example, diplomats or students or training company workers who were dispatched abroad. The number of these elite group defectors is now increasing. So this means that there is a high demand for defection, but it is really hard to cross the border because North Korea is tightening control over the borderline. So it is almost impossible to cross the China and North Korea borderlines to defect from North Korea.
South Korea's Vice Unification Minister Kim Soo-kyung there. Some of the other geopolitical stories that we're tracking this hour: China and the Philippines are trading blame after a Chinese Coast Guard ship collided with a Philippine vessel in a disputed area of the South China Sea. Manila claims its vessel was subject to aggressive and dangerous maneuvers from 8 Chinese ships, including ramming and dousing by water cannons. The incident is the latest in a series that has fueled tensions between the two nations. Ukrainian President Volodymyr Zelensky says Kyiv's incursion into Russia is part of an effort to make Moscow accept a fair peace. Ukrainian forces claim to control over 1,200 square kilometers of territory in its first foreign military offensive inside Russia since World War II. Russia's defense ministry says its troops continue to repel Kyiv's efforts in several areas in the Kursk region. More ahead on the Asia trade. This is Bloomberg.
is this real momentum from Wall Street? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
A lot's happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Messaging app Telegram has questioned the grounds for the detention of its CEO. Pavel Durov was taken into custody at a Paris airport over the weekend. Our tech reporter Annabelle Jewellers joins us now. So what do we know?
Well, we do know that Pavel Durov, who's the CEO of Telegram, he established his messaging app with his brother back in 2013. We do know that he's been arrested in France over the weekend at Le Bourget Airport, which is on the outskirts of the city, Paris, the capital, of course. And what we're hearing, the reason for this is that he could have failed to take steps to prevent the criminal use or criminal activity of Telegram. Telegram as a messaging app, and many people are familiar with it, but it's essentially a little bit lighter touch on content moderation, and so because of that, it's also been perceived as an app where people can very easily spread misinformation, disinformation, and that's really catching the eye of a lot of governments worldwide, including the UK, of course, early this month, because we had those anti-immigrant riots. That was really spread around on Telegram as well, but France does seem to be taking notice here, and we're hearing that the ministry or agency that was set up to combat violence against minors or younger adults, essentially, of men, they're the ones that could have arrested or issued the arrest warrant for Durov.
What happens now?
So what happens now is that his arrest or detention has already been extended once for a 24-hour period. So that came through late Sunday. It could possibly be extended for up to 96 hours. That's according to the French judicial system. We do understand that he could be looking to face the courts on Monday. And so we'll obviously get more updates at that point. So that's really key from that perspective. We're also starting to hear from key people within this. And one of those is from the Russian government, because Durov is a Russian by birth. We don't know whether he's renounced that citizenship, but they're certainly going to be pushing for his rights, it seems, publicly and perhaps behind the scenes as well.
Annabelle Jewellers there with the latest. We have more ahead on the Asia trade. This is Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything. Earnings season is here.
You're seeing back-to-back billion-dollar-plus quarters.
The forward indicators were so positive.
Bloomberg is first to break the numbers.
Texas Instruments app, folks. Goldman Sachs.
Taking a look at Mattel.
There is something for everybody.
With the smartest insights.
People are whitewashing AI.
Wallets are under pressure.
We are committed to EVs. They're going to happen.
Earnings season in full swing.
We will have full and instant analysis.
Continuing coverage on Bloomberg. Context changes everything.
up-to-the-minute political news, whenever and wherever it happens. I'm Joe Matthew at the Democratic National Convention in Chicago, and this is Bloomberg.
The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks. Inflation is now much closer to our objective, with prices having risen 2.5% over the past 12 months. While the task is not complete, we have made a good deal of progress toward that outcome. My confidence has grown that inflation is on a sustainable path back to 2%. Today, the labor market has cooled considerably from its formerly overheated state. The cooling in labor market conditions is unmistakable. With an appropriate dialing back of policy restraint, there is good reason to think that the economy will get back to 2% inflation while maintaining a strong labor market.
Chair Jerome Powell speaking there at Jackson Hole. You can see the impact when it comes to trading in the dollar. The dollar index, DXY, there at pretty close to a year-to-date low at the moment. That's also being dragged lower on account of the stronger yen. So this sort of cycle is really starting to fall into play there. We're clearly seeing yen bulls now emboldened after we heard from Governor Ueda in pretty careful but clear language to Parliament on Friday that rate hikes are still on the table. Let's bring in Khun Go, who's a head of Asia Research at ANZ. So, in this way, are all the kind of building blocks in place for a pretty sustained dollar yen move in the direction that we're seeing, given that we're hearing that both from the Fed and also some, careful but confident narrative from the BOJ as well, despite the recent market turmoil?
Yes, we are approaching something that is very rare, which is policy divergence between the Fed and the BOJ in opposite directions. Now we have the Fed very clear that they're going to begin an easing cycle. And it's going to be a cycle where they'll be cutting anywhere between 200 to 250 basis points by the time we get towards end of next year, whereas the BOJ, I think, is on track to continue to normalize towards at least 1%. So given that backdrop, I think it's reasonable to expect further downside in dollar yen from here. And even, at today's levels of 143, I think you got to, assume that based on the narrowing yield gap, we could easily head towards, the mid-130s.
Mid-130s, what's the sort of time frame for getting to that? Because it seems like 140 could quite easily be repeated.
Look, I think the 140 could break, quite soon, because historically, if you look at how the DXY has tended to perform heading into Fed easing cycles, a lot of the weakness tends to be front-loaded heading into the first rate cut. During the easing cycle, how the DXY performs depends on a host of other things, including how the global backdrop is. So, given that the DXY has already had a big move down, I think there's further to go. This front-loading, as I mentioned, but once we get into that September rate cut, I think the path from there will probably depend on a lot of other factors. So the 140 level, I think, could potentially even occur before the Fed embarks on its first rate cut.
Zooming out, given the broader direction of travel when it comes to the Fed, is this just positive for Asian currencies? And how much could stronger exports and just a trade picture also help?
In terms of how Asian currencies tended to fare during Fed easing cycles, if you look back at the historical record, it's actually quite mixed. Around half of the time, Asian currencies tend to appreciate, when the Fed starts to cut, and the other half of the time it tends to depreciate. So what this indicates is that the global backdrop is actually more important than whether the Fed is cutting or not, which makes sense because Asia is largely export dependent. If the Fed is cutting because of a recession or a global crisis, that does not help Asian currencies at all. So this is where the view around whether or not the US is going to achieve a soft landing becomes really important. Now, my view is that the US is heading towards a soft landing. I don't see any concrete signs that the US is in danger of going into a recession. recession, Asian exports continue to do extremely well. So this looks like one of the backdrops where heading into this Fed easing cycle, we have a soft landing, we have very strong Asian export growth. That's a very, very favorable backdrop for Asian currencies. So my view is that I think we're set to see a strong rally, a rebound in Asian currencies during this Fed easing cycle.
Too favorable, even perhaps for the Chinese yuan? I mean, we've been very much focused on the yen carry trade unwind, but what happens with the Chinese renminbi and if that trade also unwinds?
Look, I think the yuan has also suffered part of the carry trade during the first half of this year. After all, you had the PBOC cutting rates. Growth in the Chinese economy has been quite sluggish. So I think there's also been a huge short position that has been built up in the yuan, not to the same extent as the yen carry trade. But I think most of this is done by exporters. Now with the Fed very clear in that they're going to begin cutting interest rates and the dollar starting to weaken, I think you might start to see an unwinding of this yuan carry trade by the exporter community. By and large, they've been hoarding a lot of their accumulated foreign currency receipts, especially since 2022. They've been converting just a bare minimum because it made sense to keep most of their proceeds in dollars. But now, with the monetary policy dial turning, I think we're going to start to see them converting a lot more, which is going to push dollar CNY and dollar CNH lower.
We have the 1-year medium-term lending facility rate decision by the PBOC today. What can we expect from the central bank in China, especially given the moves from the Fed?
We're expecting one more rate cut from the PBOC in Q4. But given that rates already are quite low in China, and we're looking at 10 basis point moves only. So whilst you can argue there's also policy divergence in China, the reality is that we're looking at a 10 basis point rate cut from the PBOC in Q4, whereas we're looking at potentially over this cycle, as I mentioned, 200 to 250 basis points of rate cuts from the Fed. So therefore, I think in this instance, the PBOC easing policy is not going to put any pressure on the yuan at all.
I'm wondering what you think of the impact of the US election in terms of the fiscal outlook for policy from either party, really. Do you see at this point that the Fed narrative is so powerful that the election outcome is going to be ultimately dollar neutral?
Well, there's still a lot of uncertainty around the outlook for 2025, and depending on which party wins, because this will have quite a significant difference, not in terms of fiscal, but importantly for trade policy as well. And particularly for Asia, this is where it's most sensitive towards. In terms of US fiscal policy, I think on both sides, it looks like there's going to be probably further deterioration on the fiscal position. I think to me, the first test will actually be in January when the debt ceiling needs to be negotiated. I think markets are not really focused on that at the moment, but I think they'll start to zoom in really closely because there's a risk that if there is no debt ceiling negotiation done in time, there's the risk of potentially lockdowns and the usual political drama that goes around with it that can cause market volatility. So I think that will be the first test.
Khun Go, really good to have you with us, Head of Asia Research at ANZ. Economists are growing increasingly pessimistic about the prospects for domestic demand in China as they lower their forecasts on consumption and inflation, among other indicators. For more, let's bring in our Chief North Asia correspondent, Stephen Engel, in Hong Kong. So, Steve, what does this latest Bloomberg survey tell us?
Well, it really tells us what we've been seeing over the last many months, and that is a deceleration or at least a very stagnant Chinese economy, especially when it comes to domestic consumption as it relates to retail sales and the overall spillover effect that we've definitely seen for many months from the ongoing property slump. That has affected, manufacturing of many materials. That's led to 22 consecutive months of factory gate deflation, heading for this month for a 23rd straight month. CPI inflation is weak. Retail sales are not going to meet expectations. They're actually being ratcheted down. The top line of this survey is growth, GDP growth year over year will be 4.9%. So missing that target of around 5%. Well, I guess 4.9% is around 5%, but still below that 5% level. 2025 will be 4.5% and 2026, 4.2%. Why? Again, consumption is not there. Retail sales, of course, is a key barometer of consumer spending, is now forecast by these 69 economists surveyed by Bloomberg between August 15th to August 22nd. Retail sales now expected to rise just 4% this year, down from an earlier consensus of 4.5%. 4% for retail sales growth for a full year would be the slowest increase, barring the pandemic, and could throw those years out, since the government began making that data available in 1999. People are cautious. People are not buying big ticket items like cars. They're definitely not buying homes right now. They're waiting for prices to continue to come down. That's why inflation forecasts are also coming down. We're seeing CPI inflation has been weak, barely above zero every month this year. 22 straight months of PPI deflation, factory gate, and the forecast for inflation is trimmed. Full year CPI now expected at just 0.5% in China, down from an earlier poll of 0.6%. PPI now not expected to return to positive territory until earlier next year. Previous poll said it was likely to happen later this year. But again, the trends are not looking great. Export growth seen at 5.5% in the current third quarter versus 6% previously. So even exports are coming down. Fourth quarter will decelerate further, according to the survey. Export growth of just 4.4%. One bright spot I'll just add, imports ahead of expected further trade disputes and protectionism between China and the United States. There's been a lot of stockpiling going on.
Unsurprisingly, Steve, that means a lot of economists are calling for the PBOC to do more, right? Will they?
Well, that's the big question as far as how far can they go and will they risk going right now. The survey says obviously we know the PBOC lowered a key policy rate back in July. Survey indicates lenders may cut the 5-year LPR, loan prime rate. That's a key barometer, obviously, for mortgages. They've done so many different moves, small, some people would say piecemeal approach to trying to stimulate demand in the property sector. It hasn't necessarily picked up. Maybe the rate of price declines has decreased a little bit, but still it's not anywhere near a recovery. So we could see a 10 basis point cut by the end of this year in the 5-year LPR, according to many economists surveyed, instead of just 5 basis points in the previous poll.
Chief North Asia correspondent Stephen Angle there. More ahead on the Asia trade. This is Bloomberg.
People ask me all the time, what is the key to being a really good investor? I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
To be a value investor is to pay less than the business is ultimately worth. And if the price 2 years from now should be considerably higher than it is today, the stock is likely undervalued.
Scientists and public health officials say the Mpox outbreak in Central Africa could have been avoided. The World Health Organization has now declared it a global health emergency. 575 people have now been confirmed killed in the Democratic Republic of Congo, among many thousands of infections. Let's get more on today's Bloomberg Big Take with our senior editor, Jason Gale. So, Jason, I recall when this first became an issue, it seemed like it was coming under control. There was a vaccine, certainly in Western nations. So how did it get to this point?
Yeah, well, this is a different strain, Heidi. This is the strain known as Clade 1b that is spreading from human to human through close physical contact, including sex, which is something that hadn't been seen before in the Democratic Republic of the Congo. And so that's what's really alarming about this particular outbreak.
I think everybody reeling from the trauma of the COVID-19 pandemic is asking, how bad could this get?
Well, at the moment, there are no vaccines in the DRC, the Democratic Republic of the Congo, to counter this effect. There are also insufficient testing, diagnostics, and surveillance. So right now, it's continuing to spread in a really alarming way and spilling over into neighboring countries. And as we saw last week, getting into countries like Thailand and Sweden the week before.
The WHO has said in the last 2 years there hasn't been a single penny of donor money invested at a global level controlling Mpox. And we know that the mobilization of funding and political impetus behind the COVID vaccine is what got us there. That seems unlikely in this situation.
Yeah, so this problem has been brewing for decades. The monkeypox virus has been spilling over and infecting people, often those hunting wild animals, eating them for protein, essentially. And for a very long time, this has caused only small outbreaks in villages, but now we're seeing large outbreaks infecting thousands of people in urban areas. And that's what's really concerning about this. And that's why there is such a need right now for the resources, the countermeasures to help African countries contend with this outbreak.
What are those measures? What needs to happen next, according to people that you've spoken to? And I guess, is it likely to happen?
Yeah, well, they certainly do need vaccines. We have vaccinations that were developed for smallpox that offer a very high level of protection after 2 doses for Mpox. Those vaccines aren't being deployed yet and probably won't be for months. Unfortunately, there have been red tape and logistical problems, all kinds of hurdles in getting the vaccines to these countries. They also need to be put into cold storage and to have detailed plans to roll them out. Those steps are yet to be taken, so it may be several months before we can see these countermeasures adequately deployed.
Jason, who are the most vulnerable at this point to get this disease and to actually perish? And what do we know in terms of how widespread it's gotten outside of Africa?
At the moment, Sherry, we do know that children are the most vulnerable. They're the ones who tend to get more severely affected, more lesions, and develop a more severe illness because of Mpox, and unfortunately are overrepresented among the fatal cases. At the moment, we don't have much information to believe that the virus this particular strain is spreading widely outside of the Democratic Republic of the Congo and its neighboring countries. We know that Burundi is heavily affected, but at this stage, it doesn't appear to be a global, a disease that's seen globally.
Senior editor Jason Gale there, and you can read the full story on today's Big Take on The Terminal, or also head to Bloomberg.com. We have more ahead on the Asia Trade. This is Bloomberg.
The top names in business are on Bloomberg.
Technology has a big role to play in healthcare in multiple ways, and we're very heavily invested in that. The whole interface between tech, AI, biopharma is a very interesting space. Much of the healthcare industry, particularly if you look at the UK, you look at the US as analog, it's actually quite staggering. Stuff is on paper still. And forget AI, you know, basic technology adoption.
Nobody covers business like Bloomberg.
Jumpstart your trading day with 2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
Bloomberg Open Interest, weekdays at 9 a.m. Eastern, only on Bloomberg Television.
A little bit of a mixed picture across markets in Asia. We're seeing the Nikkei falling more than 1% right now, being led lower by the likes of healthcare, information tech stocks, as well as financials. Of course, this is curbing 2 sessions of strength in the Japanese market as we see the Japanese yen now strengthening towards that 143 level. And this, of course, really a reaction to what the Fed is doing towards really dollar weakness as well, not to mention, of course, recent comments by Governor Ueda when it comes to more potential rate hikes here in Japan. And we're seeing, of course, those auto stocks here in Japan also moving, the likes of Nissan, for example, falling downgraded to underweight from neutral at JP Morgan. We're also seeing the likes of Yamaha declining, given the shareholders are selling the company shares, and you can see the broad downside in auto stocks right now. But really, it's a big week for Chinese earnings, with many major banks and EV firms set to report. Traders will be looking ahead to results from companies including ICBC, Bank of China, and BYD. Bloomberg earnings reporter Rena Sasaki joins us now with the latest. Should we start with Chinese lenders? What are we expecting?
Yes, so major state-owned policy and commercial banks, including CCB, ICBC, and Bank of China, which President reside over the weekend, and Agricultural Bank of China will be reporting this week. And the margins will be in focus as the lenders are navigating through the weak credit demand, as the sector is still exposed to persistent property crisis, which we will see in results from the China Bankies disappointing earnings this week and stagnating consumption in China.
We're also expecting earnings from BYD. Of course, we've been watching this sector very closely.
Yes, so the BYD's the second quarter net income will likely jump 25%, driven by 40% surge in its new energy vehicle sales. And it's the upgraded edition of its very popular SUV model Honor will likely led a strong order intake. Yes, so we are also watching out for any comments on the provisional EU tariff that the company will face a 17%. The spokesperson last week declined comments after its new measures release.
What else are we watching out for? What's on your radar?
Yes, so Sinopec, China's the top oil refinery, will likely report the marginal increase in its first half profit. And we'll also see the Meituan and Li Auto will be reporting this week. So it will be a big the Chinese earnings weeks.
Our Bloomberg earnings reporter Rena Sasaki. Their big week ahead with for China, of course, with a firm focus on how the economic weakness has been translated into the bottom lines of these companies. We're also watching broader commodities as, of course, we continue to see perhaps a calming of these recent tensions in the Middle East, with both Israel and the Hezbollah side saying that they're sort of completed for now, but still we have seen that rise in oil prices as those Israeli strikes on Lebanon really ratcheted those tensions up higher. We also saw, of course, course, some of these concerns being pulled back when it comes to the supply side. Oil is now just marginally higher for the year, and geopolitical risk has really been a big part of what's aided that. We're also, of course, expecting a rate cut from the Fed next month, as really signalled by Fed Chair Powell in what is perhaps the most decisive communication yet in his speech at Jackson Hole. We're also watching, when it comes to the China side of things, what we see as the impact on the likes of iron ore markets as well as copper markets. We're actually seeing a little bit of upside there for iron ore, about 1.4% higher trading in Singapore, but there has been sort of that resistance around that 100 per tonne level as futures have really retreated as they get closer, a whisker of that level before sort of surrendering those gains, signifying quite a bit of caution still for the outlook. Also seeing just some broader upside for base metals more broadly as part of that reaction to Jay Powell's speech at Jackson Hole, Sherry.
Really not a lot of movement when it comes to U.S. futures. Of course, we saw stocks and bonds rallying on those comments you mentioned. What really caught my attention, the direction of travel is clear, according to Chair Powell. And he also talked about the cooling labor market, of course, very important, the upcoming August jobs report. And we also have two inflation reports this week. We get the Fed's preferred inflation gauge, the PCE core index. So do watch out for that as we continue to watch NASDAQ 100 futures not doing much. We are headed towards NVIDIA earnings, the big one this season. That's it from the Asia trade. The China Open is next. This is Bloomberg.
What are your thoughts on fast fashion? It's been transformative. It gives the masses access to fashion, but there's a cost to it, downside to it.
My personal is like too much waste. I think this is also how I grew up, making your own clothes and making something that's very special and very unique. It's like timeless. And now you see that everybody is looking the same, like wear sweatshirts and wear T-shirts. And for me, it's just like when they wear something very special, they feel empowered.
Is there a need for fashion to be more mindful of the impact it's having socially, environmentally? Definitely. Is it happening enough?
I think it's happening. It's gradually happening. All the designers are doing, everybody is thinking about this subject at this moment, thinking how to be more sustainable, how to be more environmental friendly.
Do you think the fashion industry is doing enough to ensure that it is sustainable? There's so many targets out there. Are they even realistic in wanting to achieve them?
I think some of them are just like they're using sustainable ideas as a marketing concept only. They're actually not really doing it. I think as a designer, it's really important to really make it happen. Every collection, I think about how to do it and how to tell the customers. I think that is our responsibility to educate our customers.
The top names in global leadership are on Bloomberg.
We are 40 million. We're a big country, and we really depend on the aid from the world. And we depend on the aid and the position and the stance of the US. So I would like to understand, what would it mean to finish war fast? If Trump knows how to end this war, he should tell us today. Because if there are risks to Ukraine's independence, If there are risks that we will lose the statehood, we want to be prepared for this. We want to understand whether in November we will have the powerful support of the US or we'll be all alone. Only our lives are at stake here, and nobody can just trade our lives.
Nobody covers the top global leaders like Bloomberg Television and Radio. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Half an hour away from the Opens in Hong Kong, Shenzhen, and Shanghai. You're watching The China Show. I'm Yvonne Mann with David Ingles.
Good Monday morning. Our top stories today, stocks across the Asia Pacific mostly on the up and the dollar under pressure on Fed Chair Jay Powell's rate cut signals. Oil is climbing as Israeli strikes in Lebanon ratchet up tensions even further. Now, Chinese media say the PBOC is conducting stress tests on financial institutions holding bonds as it seeks to curb market risks. And earnings in focus as we speak exclusively with Pilbara Minerals CEO Dale Henderson and Andrew Tam, CFO of Stella International.
The direction of travel is clear were the words from Jay Powell on Friday. That certainly is resonating a little bit here across the Asia session after we look at what happened in Jackson Hole, that speech basically solidifying those rate cuts for September. And certainly the market is still debating whether 25 or 50. That is still up for debate this morning. But certainly it's helping equities move higher. U.S. futures are still flat slightly, but the drop in the dollar has been sustained. And you take a look at FX across the board, and basically the Bloomberg Dollar Index dropped the most all year on Friday after that speech. And we're talking about the longest losing streak in more than a year with 4 weeks of losses for the greenback. So you're seeing a euro dollar that's punching close to 112 levels right now. And we broke below 144 for dollar yen. That's why you're seeing red across equities in Japan. We're down about 1% on the Nikkei 225, but you are seeing some gains in Taipei just opening up. We're up about 0.8%. And basically we saw across the board when it comes to treasuries, the relief across bond markets as well. We see the 2 year is down about 3 basis points and continuing on with this bond rally. Keep in mind, though, that's all the good vibes that we're seeing in this market, but we're also dealing with a lot of geopolitical risks, given what we heard over the weekend with Israel's military launching a wave of airstrikes in southern Lebanon on Wednesday, or I should say Sunday. So you're seeing Brent markets, crude markets had a spike up as well. We're watching that sustained here this morning with Brent. We're close to around $80. Gold, spot gold, mind you, is reaching or has already reached a record as well. So that is one to watch. We talked about the oil moves. We talked about the dollar moves as well. And you're seeing it much more meaningfully across some of these big currencies like the pound. The Mexican peso had a massive rally. We're reversing that a little bit if we flip the boards and show you how things are going. But yes, sterling's at 132. Sing dollar's at a 10-year high at 130 here right now. And we're watching some gains across the Malaysian ringgit here as they open things up for this Monday morning as well. How China's going to fare, certainly it's still a renminbi story. We're talking about a 5 week of gains that were locked in last week for the onshore rate. That is the longest winning streak we've seen since 2021. For dollar China. That certainly is going to be something that's quite interesting for the fix here today. We flip the boards and see how futures are looking like. There also was a story about the PBOC looking into the bond trading and the like here. So that's something that we're going to be looking very closely at, conducting stress tests on bond investors to curb the risks there. Futures, though, are pointing positive. Dave.
Yeah, really on the back of what we now already know, what markets were anticipating on Friday, and certainly a dovish Jay Powell is speaking at Jackson Hole, signaling the coming rate cut cycle. Have a look.
The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks.
And you are seeing more of that market pricing into September now. I think there is more leaning, maybe a little bit more to the 50 basis points camp, but certainly 100 basis points or more still being priced in when it comes to the rest of the year. Oil markets, though, as we talked about, have been moving. You take a look at how things are looking at. Shanghai crude, for example, is popping about 2% on the back of what we heard just now. What was probably one of the biggest exchanges we've seen between Israel and Hezbollah since they went to war back in 2006. So how is this all going to play out certainly is a big thing for these markets. And what is OPEC Plus going to do? Are they going to have to revise these output cuts?
Yeah, well, that's probably why we are, even though we are seeing gains in oil, we seem to be hitting some limits to the upside as far as this is concerned. In fact, the big step back piece for markets that we went into last week was, why is gold outperforming oil given the backdrop that we are especially seeing? Now, to the point, of course, of Yvonne earlier on the Fed cuts, for example, 1.3 cuts is priced for September. Bloomberg Economics think when you look at that conversation, we actually get 50 basis points there. So these two top stories are coming together as we move into a fresh market trading week. Now, more on what we know so far. Took place in the Middle East, of course, relative calm holding there after Israel's Sunday bombing raids on southern Lebanon. Israel says it took out thousands of Hezbollah missile launchers based on intelligence that the Lebanon-based militant group planned these imminent attacks. Let's bring in Derek Wallbank to get us up to speed of what we know. He's with us out of Singapore today. Derek, where are we now in this conversation?
Well, David, right now we're in a situation, as you said, of about relative calm, right? Israel launched these attacks on what they said were a large array of missile launchers. Hezbollah responded with launching about 200 projectiles into Israel. You did see some delays at the airport, some flight cancellations, things of that nature. But overall, death toll relatively muted. I think is 1 on the Israel side and 3 on the Lebanon side. It's a very sort of strategic kind of launch that has not so far conflagrated into too much else. You've seen on the American side a support for Israel so far. You haven't seen big condemnations out of the U.S. here, so there's some signs that the U.S. has not opposed this, at least. The aid seems to still be flowing. There haven't been fresh threats to cut that off. So, as I say, it's a very sort of, you would not necessarily say that something like this is a muted thing, but certainly in terms of like the immediately big fears of conflagration, as you suggested with the market reaction, have not necessarily borne out right now. Now, it's important to mention, though, as we say, the word muted and we're talking about a kind of depressed reaction to this, there really is an open question of how this fits in amid the broader scope, right? Because Iran has still got a pledge out there to retaliate for an earlier Israeli attack. There are still the negotiations between Israel and Hamas that have not yet produced a deal. And there are open questions about how much each side wants one of those deals, right? And so there are a lot of sticking points, I think, out there right now in this situation.
Derek, thank you, Derek Wallbank, with an update what's been going on over the weekend as well. Let's bring in with the market perspective and what that could look like. Gareth Nicholson, CIO and head of discretionary portfolio management at Nomura. Gareth, it's always great to have you. It's a big week. Obviously, we got a bit more confirmation from Jay Powell on Friday, but we're not seeing markets rally too hard, just given some of the Middle Eastern tensions. We also got NVIDIA earnings to talk about this week as well. How do we set up for the week so far?
Yvonne, you're 100% right. It's a big week. I think all of it is really looking at Chairman Powell's message and how that plays into the key question that investors want answers to. One is, will this equity retracement, will this equity rebound continue? And 2, do we think that we should have bonds into the portfolios? Do we think that the effectiveness is there? And Powell had 3 things here to get across. One was the direction, which is confirmed that we're going to see continued cutting from the Fed starting in September because inflation has come down. And as we know, when inflation is high, the correlation between bonds and equities are very high, and you don't get that kind of diversification factor from bonds. So first answer he gave to us was bonds are in line. Second was the idea of what velocity is going to cut. And I think there's a lot of questions. You talked earlier on about maybe 50 basis points the next cut. We think that's only going to be 25, followed by another 225s. So that's going to be very interesting to see how the market reprices that when we're trying to bring in a soft landing with regards to these jumbo rate cuts. And the equity market is going to take that for stability. If you see stability in the rates, then they can focus on earnings. They can focus on the next catalyst to break the next high. So a lot of interesting things coming through.
Gareth, David here. So let's take that apart. You mentioned, what's the role of bonds in portfolios right now? You look at the Treasury curve. Do you think we'll see new lows, or have bond markets, in your view, priced the cuts that are coming throughout the end of the cycle as we look ahead? I mean, markets tend to look ahead, of course.
Yeah, exactly. Thanks, David. That's a good point, because it also brings in the third one that Powell was trying to articulate, was how many cuts are we going to see? We've had direction, we've had velocity, now we want to see the length of it. And that's going to dictate how much movement we're going to see in the bonds. At the moment, the bonds are pricing in about 250, 225 of cuts. That brings the terminal rates, the level that the Fed will stop at, around about 350, 325. Now, that's higher than what traditionally is about 2.5. And why that's important is that will give us a kind of how much bang for our buck we'll get from the longer dated bonds as the curve kind of comes down with the front end. And we don't think it's going to move that much, because we think the terminal rate's going to remain higher. There's a lot of factors about inflation remaining sticky, a lot of geopolitics, trade, supply chain, that potentially means if inflation is higher, terminal rate remains higher, means we're not going to get as much bang for the long dated bonds as we would if the terminal rate was lower. So we have to play that in. Our case is it will remain higher than traditionally. So long-dated bonds will be an interesting play, but a large amount of this move has been priced in. Market overdone it, and now we'll see a bit of a correction and another opportunity to reposition into bonds.
You've been flagging a little bit on what we're seeing in credit spreads in the junk bond market that are shrinking again. We haven't seen that much of a blowout in spreads, really, even when we saw the wobbles, at the beginning of this month. What does that tell you, Gareth?
Well, Yvonne, credit is normally the wisest investor on the street. When you look at credit spreads to see what the longer term reaction or feeling of the market is, and credit spreads are incredibly tight. From a bond investor, why are we focusing so much on rates and Powell is because that's where we're going to get the return. Credit spreads are not giving you the return. They're very, very tight for an environment where we have serious geopolitical issues still happening. You've got a big change in Fed policy. You've got a slowdown in the economy, albeit we think it'll be a soft landing. But credit spreads are pricing to perfection. So we do think that it only takes a few movements, maybe increased issuance or a little bit of volatility around certain names to see spreads widen from here. There's not much value in spreads at these levels currently.
Gareth, you mentioned hopefully we can get you focused now on things like earnings, for example, now that at least the Fed conversation is largely cemented. We'll see. NVIDIA's coming out with earnings today, arguably the most important set of earnings globally. What do you suspect? How do you think markets will greet NVIDIA earnings coming through this week?
Well, we won't talk specifically on the company, but this company has become a bellwether for growth for the AI story. And that is a theme which is driving, the catalyst for the next, record high. How do you get to a next record high? You need some sort of FOMO, some sort of fundamental FOMO that people want to get involved. They don't want to miss out the story. And NVIDIA is going to be key to kind of reignite the catalyst that AI is around. It's still pretty early in the stage. You're starting to see AI and technology empower a lot of other industries like healthcare, biotech's really picked up. So I think it's going to be incredibly important to understand, is this the time that we're going to see the fire lit again and we're going to get that push up? Because you don't have that headwind of the Fed. So it's going to be extremely exciting to keep a close eye on. And, they haven't really disappointed too much in the past. It's an incredibly strong story. We're still supportive of the AI journey, albeit we think the value will be in the secondaries, in other regions that are still lagging, in other sectors which are going to use the technology. But very exciting week.
Is that why you say you look at some of these lag markets where you're upgrading the likes of Malaysia, Indonesia, downgrading China? I mean, can you walk us through the thinking behind that and why sort of this rotation, you think?
Well, Yvonne, I think when you have uncertainty, and we do have uncertainty in the market, we need a catalyst to push it up. Now, NVIDIA could be the catalyst to lift the entire market, but let's say it comes in a bit more less overwhelming, then you're going to look for where the laggards are, where they're still going to benefit from a relatively strong number in a relatively stable economy. And this is where the laggards like Malaysia, like Vietnam, like Indonesia, places that are growing, that are involved in the supply chain, that have their own dynamics, plus are being supported by the China Plus One story of rotation, that potentially can benefit from people looking to allocate cash into places that they haven't been before and they see the value. This is why we saw a huge amount of money, go back into Japan because it was very underweight for a long time. You saw India. Now we're starting to see some of the Southeast Asian economies also benefiting from the flow of cash out of potentially a weaker dollar and into a place where you're going to get a bit more growth, albeit still pretty tactical for most international investors. Smaller allocations within their whole portfolio.
Right. And Gareth, very quickly, the dollar's been falling out of bed. Worst week last week this year, lowest level of the year on some of the major greenback benchmarks. What are you telling your clients? Do we expect dollar softness to continue, or is this a time to get back into treasuries? We were at the point we were making earlier on.
Well, I think what was quite telling from the Jackson Hole speech was as soon as they were done, you started having the other major central banks, the ones that are the biggest components of the DXY, of the basket that the dollar is against, like Canada, like the European economies. They are looking to also be more dovish now. So that interest rate differential against some of the majors is going to stay pretty tight. That means the dollar is not going to just fall off a cliff. It's going to be, where do you go if you don't want dollar, and if the other places are also reducing rates. So I think you're going to have a slow trend down from a very strong dollar over the last few years, but it's not going to be a huge shift like we've seen over the last few weeks, because there'll be more talk from the other central banks, which make up a big component of the basket.
Gareth, have a great week. Gareth Nicholson there, CIO and Head of Discretionary Portfolio Management at Nomura, joining us out of Singapore. That renminbi fix just crossing your Bloomberg, and it is looking to be weaker than expected, but still on the strong side of things. If we're talking about 7-11 handle for that, just given what we've been seeing with dollar China and the strength that we've seen in the renminbi. It's interesting. We have a good story out on the Bloomberg about even if this whole yen carry trade collapses, the yuan could still be doing something separately, that it could still work in this whole kind of funding currency sort of space.
Could go separate paths. As they say, 7-11.39 right now, and certainly the dollar weakness we were talking about this earlier with Yvonne, right? So the yuan is on a 5-week win streak, which is the longest weekly win streak in about 3 years or so. Watch this very closely. We have a rate decision, by the way, coming out of China in about a couple of minutes from now. One of the other big events, of course, we're tracking this week, as we were talking about earlier on, NVIDIA comes out Thursday morning Asia time before markets open up, Thursday morning after the Wednesday session in the U.S. And the implied move we're seeing priced in, when you look at options, for example, is a whopping 9-10% move in either direction. So in other words, it's going to be a very exciting week moving.
Oh, yeah. Watch out for that one. We also have some PCE inflation, like, but maybe this could be the bigger game changer for markets. We're counting down the opens of trade in Shanghai, Shenzhen, and Hong Kong. This is the China Show. Happy Monday.
your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.